keynote session to the economic outlook, the unveil of the second report. We also have a panel session, and all of this are thoughtfully curated to align with our vision, which is wealth creation. So what we're doing is to challenge your mind. With us, and we want to say thank you. And those who flew out of the Federal Capital Territory to be here, thank you for being here with us, and as well as our hosts, those in the Federal Capital Territory. Can I ask those who are here, hosts, to give themselves a round of applause? If you're based here in Abuja, okay, and if you came from outside Abuja, can I ask that you give yourselves a round of applause? Okay, so you see, the Abuja hosts, we hope that today becomes an exciting opportunity for you to show us the beauty here in the Federal Capital Territory. My name is Olive MOD. I'm a TV host with News Central Television. I'm a compare, and today I journey not just as your MC, but someone who's also learning how to redefine the way she thinks about wealth creation. So yes, I'm not just here to guide, I'm also here to learn. But to set the tone for today's event, I'd like to welcome somebody who has been at the helm of affairs in what we're doing here. Of course, he is a seasoned economist with over 20 years' experience at the Securities and Exchange Commission, where he has led key reforms to strengthen investor protection and deepen market participation. He holds advanced degrees from some of the world's most prestigious universities and currently serves as the DG of the Securities and Exchange Commission, a role that he's described as the icing on the cake after a long career of service. But he's clear that leadership is not about resting on laurels. He is an evangelist for the transformative power of capital markets, driven by a desire to leave a legacy of an improved and efficient market. Please join me as I welcome today Dr. Emomotimi Agama, who's represented here today by the Executive Commissioner Operations for SEC Nigeria, Bola Ajomale. A round of applause for him as he comes for the opening remarks.
Ladies and gentlemen, good morning. Those who are coming in from outside Abuja, you're very welcome. I bring you greetings from the DG of the SEC. He's much taller, has a louder voice, and has a totally different sense of humor. But I will try my best to deliver what he has to say in my own words. I am indeed delighted to be at this event personally, and the DG would have wanted to be here. He's on his way back and should be back in the country, I think, later on this afternoon, so he still might turn up, but he did ask that I kindly represent him. But I am personally delighted to be here because my two brothers here go back 30 years, more or less, of being soldiers in the capital market, trying to build it and trying to imagine what the future will be like. At the time, we didn't know that's what we're doing, but from the crowd I see in this room, we certainly have been very successful at it. And Wale, Wale, well done, and congratulations. This is really important and critical. We've done 3 years of it, and I'm sure everyone in the room here has imagined wealth. Everybody imagines wealth before they create it. And so this is great for us that we're actually sitting back, taking some time to reimagine, even after we have imagined and created some, we're reimagining the future as well, what's going to happen. We're privileged to be able to take this time out, not only for the potential growth of the company, but also for the potential growth of even our own individual wealth. So this is the great thing we're doing today. Our mandate at SEC is basically to support everyone's growth aspirations, financial growth aspirations in the capital market. We regulate, we develop, and we protect even the transparency of the market. And that way we hope that it affects everyone's pockets. We received some significant power, additional power this year when the President, Bola Tinubu, signed off the Investment and Securities Act 2025. That act is extremely pivotal to the Nigerian economy and to the capital market. It overhauled our framework, and in overhauling that framework, we've now been leapfrogged into being in line, in sync with the rest of the global economy. The last act we had was the 2007 Act. And so by this, we've now updated ourselves, not only updated ourselves, but we've actually now become at par with the rest of the world in terms of our laws and our enabling acts. But then again, we've done some, even at the granular level, some major things have changed. We've recognized, for example, virtual assets. It's now become central to the capital market, and I'll come back to this in a few minutes. It's allowed us to recognize the commodities market. Now, if you think of Nigeria, Nigeria is essentially an agrarian society. So imagine if the commodities market is now supported by the capital market, the significant thing that is about to happen. Thirdly, what it has done is it has allowed us to even put some power behind some dynamism that we have seen in the Nigerian economy. And I'll talk about this dynamism for a second. In terms of size, the numbers are changing, but right now we would place our debt, equity, and OTC platforms, the markets that we have there, we'll place them at about 170 trillion. First half of this year, the commercial paper industry moved up to about 1.7 trillion, 1.07 trillion, and that's a 70% growth from the previous year. Equities market, so far year to date, has delivered about 16.6%. GDP as a whole has grown by about 3% this year. So there is growth, there's activity, there's movement, there's dynamism. But even with those numbers, great as they sound, even if we overemphasize those numbers, then we miss a very vital point, which is the fact that it's not enough. And it is not covering our needs there's a huge funding gap. And we have needs in healthcare, in education, in infrastructure, and so many other things that need funding and long-term funding at that. We don't need, not that we don't need, but it's one thing to borrow. It's another thing to actually raise sustainable capital and grow wealth, even for the Nigerian individuals and for investors. In my opinion, the best way of doing this is by going to the average Nigerian and getting them to mobilize their funds, channel their funds into investment opportunities. And we are, at the SEC, are supporting every single initiative that allows that to happen. And I'll tell you the cost of not doing that. And I think we've experienced it a bit, or heard about it earlier on this year. If we don't do it, and if we don't do it right, and I'm speaking mainly to the operators in the room, but I'm also encouraging those who have their big or small wallets. If we don't channel our investments and our monies that we have in this country, then our local funds are going to be carted away by illegal operators. There will be a direct loss to Nigerian households. And then the potential that we keep talking about, that we have as this country, we will lose it. We will waste it. So it is important that there is a cohesion between the operators in the market, the regulator, and the individuals or the investors to make sure that funds are channeled in the right direction. But that's history. Let's now look at the future and just imagine, because we're imagining and reimagining the future. So let's just imagine a couple of things. The future that we can see, at least two things are prerequisites. The first one in the future that I can see for the capital market is technology. It's integral. And it's reshaping the way the whole capital market globally is operating. Cordros, you'll do well to imagine a world that has changed from the simple life of just buying land and buying UAC shares and saying, I have invested. The world has changed, and it's changing rapidly in the opposite direction, to where your competition is no longer Meristem, if you guys are competing. It's no longer, that's not your only competition. You now got robo-advisors, digital apps, fractional shares, tokenization. The whole world is changing significantly. And that speed of change is increasing. So I would encourage that you keep up with it. At SEC, we're aware of it. We've opened up a regulatory incubation platform. We've opened up an accelerated regulatory incubation platform. Both of them are to support the innovation that's coming through technology. We've got, I think, about 100, if not more, applications to open up various platforms, crowdfunding platforms, exchanges, digital custodians, every single area that you can think of in the digital ecosystem. We have got applications for them, and we're slowly approving them, taking our time, working with the other regulators in the economy to make sure that we only allow good actors to come into the industry. That innovative stance has also been spread to the area where we're encouraging even interaction. So the SEC is not a place where you keep your plans away from, and then when you've written your final document, you send it into the SEC. It's actually now evolved into a place where we sit down, put our hands together, heads together, and we work on making sure that what you're doing will actually go into the market, do no harm, but indeed the opposite, it would do absolute good. Again, what technology is enabling us to change the market, to change how the market operates. By November this year, for example, we're moving the market from a settlement cycle of T+3 days to T+2, 1. So the world is moving faster and faster. We're enabling it. We're embracing technology as we can, and we're seeing some of the effects. Second aspect that I think is going to be integral to where the world is going in terms of investment, in terms of wealth creation, is sustainability and ESG. There's a lot of money that is waiting to go into sustainable products. Indeed, the largest portfolio managers in the world now are very interested in what you can call responsible investing. That is increasing. They are looking for opportunities. I think they're slightly saturated in some parts of the world, and places like Nigeria now become an absolute haven for those kind of investment flows. So ESG and sustainability is now another area that we can see is integral to the future that we can see. Nigeria itself has so far raised about 80 billion in green bonds. The numbers that we're hearing, another 300 billion may come out in green bonds in the near future, and it's going to continue. So again, there is a deliberate move towards the ESG economy. So Cordros, I'll just say thank you for this event. As you reimagine, I would ask personally and as the SEC for 5 things at least that you do. 1, innovate well thought out and robustly governed products. We have tools and frameworks, as I mentioned earlier on. Tools and frameworks are becoming increasingly available to the regulator, to investors, and to everybody else. They're getting smarter, those tools. They're getting faster. They're getting broader. They're covering a wider area. And so what you'll be left with is a situation where your regulator sees not only what you're doing, but is comparing you to so many others, and is able to use AI to actually interrogate what you're doing. So there's more transparency. At the same time, because that technology is now available even on our phones, it means that your investors, your clients, are becoming more discerning. And I can see from the people in this room, already the discernment is there, but with more technology, they're able to compare Cordros with Meristem, with other players, and say, this is the one I want. So I would encourage you to please embrace technology and embrace what I would call the deliberate approach as innovation. Second, embrace inclusivity. From the faces I see in this room, yes, this is wealth. And there's so much to tap from the individuals here in terms of wealth. But the real wealth is not really in this room. The real wealth is the bulk that is outside in small pockets and small packets all over the place. And again, that wealth is not flighty. It's wealth that you can capture, hold on to, build a bulk, a huge bulk, and also get those individuals not only looking in the right direction, but also help them to mobilize to even grow themselves. Again, I'll go back to the fact that we lost 1.3 trillion to only one Ponzi deal earlier this year. Imagine if that had come into the capital market. Imagine if that was under your AUM. It was money that was raked in little packets from small individuals. I would always, and the DG of SEC would always, in fact, I should have been here wearing a T-shirt that says, say no to Ponzi schemes. On Thursdays, we actually wear those shirts. We have a campaign that is running, a deliberate campaign that is running to help people discern from this is a scam to this is an investment. I would ask you to join us in that campaign. I would ask everyone in the room to join us in that campaign. If we do not, we will continue to lose money. Thirdly, I would encourage you to embrace regulatory compliance and professional ethics. Where Nigeria is at this stage, we just had a review from the Financial Action Task Force. We are at the stage where we're about to leave the FATF gray list. And what that does is it now makes Nigeria, it presents Nigeria in a much better light in terms of compliance, in terms of capacity, in terms of orderliness. It makes us more attractive, basically, to international fund flows. It puts us in the position where we truly are a global player. But it's only your regulatory compliance, it's only your professional ethics that would allow that to continue and make it sustainable. As an aside, I'll also add that if you don't embrace regulatory compliance, because of the ISA, the cost of non-compliance is significantly higher. It is almost scary how we have changed the cost of non-compliance with orderliness. Lastly, I would say is protecting you adequately and avoid data breaches and protect your investors. Robust and deliberate customer protection is a must. I'll just conclude by asking everyone to imagine, as we're imagining, imagine a journey. Nigeria is on the right path. If we successfully combine regulatory clarity and technological potential with your commitment to be inclusive and ethical, we'll hit the highway. If other wealth managers, the Meristems and so on, also join, then we'll probably hit the tarmac. And then from there, we're flying. So I would encourage that we have a wonderful discussion this morning. I'm sure we will. I would encourage that we really do indeed put pen to paper. And at the end of it, it's more than just what is a lovely networking event, and it actually is truly something that will move us as a country and as individuals forward. God bless you all, and God bless Nigeria.
Thank you very much, Mr. Bola Jomale, the Executive Commissioner Operations at SEC, for delivering a very detailed welcome address. That's a very fantastic way to set the tone for the conversations we have today. And I know that the subsequent panel sessions we'll have will even expand a number of what he has said further. He's highlighted over and over again to embrace technology. And that's definitely a tool for innovation, seeing as we're reimagining what wealth means to us. We'll go along, and this time around, to officially give us the keynote address. I'd like to welcome the chairman of the board at eTransact International PLC, a leading Nigerian fintech and payment solutions provider. Until his retirement in December 2024, he served as the group managing director of Meristem, over 3 decades of professional and contributions to Nigeria's financial services industry. Under his stewardship, Meristem expanded its reach, deepened its market offerings, and consistently ranked among the country's top-performing firms. Beyond his executive roles, he continues to provide strategic direction in Nigeria's evolving fintech and capital markets landscape through his chairmanship at eTransact and other advisory engagements. He's of ethical leadership and financial market development. May I ask for a warm applause as I welcome Mr. Oluwole Abegunde, Chairman of eTransact.
My regulator, the DG in absentia, they gave me my license to operate, and I thank them for this. And I must say that the new team in SEC has been doing a fantastic job. We've seen a lot of difference in how the commission operates today. I also want to commend our friend speaking. The difference between SEC and CBN in the past has been that the management at SEC, we didn't have practitioners at the top management of SEC, but CBN was lucky. They had market practitioner at the helm of affair. But we have seen the impact of people like Ajomale in SEC today, because he has been, or he was on our side, and he knows where the shoe pinches. So while he's there, he's able to reason like us and get things done promptly. Ajomale, thank you very much. Please, I have recognized all other people collectively. But before I go on with my keynote address, I want to commend Wale and the team in Cordros. I'm so proud of them. In my profession, in the capital market, there is what we call full disclosure. So I want to make a full disclosure now pertaining to my relationship with Wale. Wale actually employed me into Meristem. My employment letter in Meristem carries Wale's signature. But Wale and I worked together for 4 years and laid the foundation of the big organization that is called Meristem today. Be there physically. When he left me 4 years after we started, became very Meristem to go and start Cordros. Mr. Ajomale, you said whether we were competitors. Cordros and Meristem can never be competitors. We complement each other because it's like a father and a son. We support each other. In fact, there's a joke in Meristem today that the only difference between Cordros and Meristem is the color of our logo. Wale and I set up Meristem with a high level of corporate governance, high level of ethics, efficiency, and he took all of this into Cordros, and today he's doing it better than us in Meristem, and for which reason I'm proud of him. I'll give you an example. When we were together in Meristem, we took a decision that after the close of the market, not more than 15 minutes, price list must go out. And the internal audit was monitoring it. That price list goes out not more than 15 minutes, because in the market we sell information. The earlier you get it, the fresher it is, the better is that information. Today, I received 3 market price lists from 3 different organizations, including Meristem. Cordros one comes in first. Because he stuck to our policy that 15 minutes after, it must always come. So, Wale, well done. I'm proud of you. And I can tell you that Cordros will go places. The topic we are discussing today, reimagining the future of wealth, is a topic that I have very personal interest in. And for those of you that have been following the advert of Mary Stem on CNN and on Channel, you see that that has been the focus of our campaign: growth, preservation, and transfer of wealth. And so it's a topic that I have researched, that I have practiced, and I have seen it happen, and I've also seen it not happen. And it is out of my experience and my research that I'm going to be speaking to you today. You see, wealth is a very vast topic, very vast. But it can be categorized into 3 subtopics: growth, preservation, and transfer. You have to grow your wealth. After growing wealth, you have to preserve it. Preservation has an element of growth in it, because you cannot preserve if your wealth is not growing effectively. Effective growth means that your wealth is growing at a rate higher than the rate of inflation. If your wealth is growing at the rate of inflation or below, it is not growing. I hope you understand this. It is not growing. Because if inflation rate, for example, is 20%, that means your wealth is losing value by 20%. If your wealth is growing only at 20%, that means it is apart. There is no effective growth. But growth begins the moment your wealth starts to grow at a rate higher than the rate of inflation, which then becomes effective growth as against nominal growth. So part of preservation is to ensure that there is effective growth in wealth. Then the next one, and very important, is the transfer of wealth. The transfer of wealth ensures sustainability, ensures it goes from generation to generation, ensures that it gets into the future that we are talking about. And it is in the transfer of wealth that most of us in this part of the world will fail. And I think statistics has it that less than 30% of wealth gets transferred to the next generation. Less than 30% of wealth gets transferred to the next generation. And about 3% gets transferred to the third or to the second generation. And it is obvious in Nigeria today, where are the rich men of those days? Where is their wealth? I don't want to mention names here, but we know them. The rich people of the 60s, of the 70s, of the 80s, of the 90s. How many of them are still wealthy today? Very few. Well, we'll get to that issue. But you see, when we talk about wealth in boardrooms, in policy circles, or even at family dinner tables, the conversation always starts and often ends with money, net worth, investment portfolio, balance sheets, property holding. And of course, this matters. There's no doubt about it. But I have spent more than 2 decades of my life leading in financial services, so I understand the power of financial capital. But if there's one lesson my career has taught me, it is this: money alone does not define wealth. Wealth is not about money. Therefore, reimagining the future of wealth begins with redefining wealth. We must come up with a new definition of wealth. And the new definition of wealth, I can tell you, does not start with money. As against what many of us think. Oh, when you say somebody is wealthy, you are talking about his bank account. You are talking about, no, that is not the definition of wealth. However, the definition of wealth may differ from individual to individual. It depends on what is important to you. I have worked with families who had billions but lost everything within a generation due to several reasons. Family squabbles, fights over will, children that are not properly brought up, spoiled children. So will you define that family as a wealthy family? No. I have seen entrepreneurs who scaled empires but neglected their health and could not enjoy the fruits of their labor. Will you define that as wealth? No. I have seen reputations crumble overnight, closing doors that even vast fortune will not reopen. That is not wealth. Wealth is more encompassing. And yet, I have also seen modest families with far fewer resources build thriving legacies because they invested in people, in relationship, in values, and in community. I think this is a better definition of wealth. It's not the quantum of the money, but the holistic picture of what wealth means. And that is why this conversation today is very urgent. Because individuals and embrace a more holistic perspective. We must reimagine wealth as a portfolio of capitals. Portfolio of capitals. And when you talk about portfolio, that means that there are different components of it. Today, I want to share with you 4 of these dimensions that I believe are essential in redefining the future of wealth. Financial capital is number 1. Human capital is number 2. Reputational capital is number 3. And social capital, number 4. Let's begin with the most familiar, financial capital. Money gives options. It provides security, creates opportunity, and fuels dreams. Without it, families and businesses are vulnerable. That is why financial discipline, planning, and investment are essential. You see, I'm emphasizing this because I am not saying that money is not important. Money is very important. In fact, the scripture says that money answereth all things. So that underscores the importance of money. But the same scripture also says that the love of money is the root. It didn't say money. It said the love of it is the root of all evils. So it's not saying that money is important, but it is your disposition towards it that creates the problem. But here are the adjustments we need to make. Shift from accumulation to allocation. Wealth should not be measured by how much we have stored, but how well it is working. For today's needs, tomorrow's aspiration, and future generation. That should be the measure of wealth, not the amount or the trillions of dollars that you have in your account. How has it been allocated? How has it impacted on the society? Secondly, think in generations. Too often, we plan wealth for retirement, not for legacy. Families should structure assets with governance, trust, and succession in mind. Again, wealth should not be grown. Wealth should be grown, preserved, and transferred. From the day you start to grow wealth, you must have in mind preservation. You must also have in mind the transfer thereof. How am I going to transfer it from generation to generation? Financial capital is the foundation of wealth. But if it is the only form of wealth we pursue, our lives and legacies remain incomplete. The second capital in the portfolio of wealth is human capital. Wealth is meaningless if the people behind it cannot thrive. Human capital is about skills, knowledge, creativity, and very importantly, health and well-being of individuals. You can pass down money, but if you do not pass down healthy, capable, and confident people, that money will be wasted. Consider this: the cost of ill health, stress, burnout, poor lifestyle choices often erodes more wealth than market downturns. A family may preserve billions, but if the patriarch, matriarch, or next generation is in poor health or emotionally unstable, the wealth cannot be sustained. You end up working for doctors. You'll be patronizing all the hospitals in the world, and nothing erodes wealth like that, because ill health is an emotional issue, and you are ready to spend all your money to get it back. So what adjustment must we make? Invest in education continuously. Not just formal schooling, but mentorship, exposure, and lifelong learning. This prepares future generations to manage wealth with wisdom. And if there is any factor that I want to underscore the most today, it is investment in our children, human capital. The emphasis today is to get our children to Ivy League schools. And we are proud about it. But they end up being academically intelligent, but not streetwise. And there's a difference between academic intelligence and street wisdom. If you ask me to choose one of the two, I will choose street wisdom. How many of the top CEOs in Nigeria today went to Ivy League schools? Some of them graduated with third class from university, but they are streetwise. Abroad today, the very wealthy people make concerted effort to make sure that their children go to vacation job, not that they need the money, but they want to groom them to make them to learn. I stand here as a personal example. My father was a postman. He distributed letters with bicycles. Right. But since when I was in primary school, when we're on long vacation, my father does not allow any one of us to sit down at all. We just must look for something to do. And the first job I did was as a vendor on the street selling newspaper. We didn't have this horn then. It was our mouth that we used to announce the headlines. And we go from street to street to sell newspaper. I also hawked mango on the streets. Not that my father couldn't afford. He was a civil servant. He could pay. And in any case, don't forget that in those days, education was free. So it's not that we needed that money. But I was undergoing training. My elder brother, who is a surgeon today, was a health consultant, was doing a bricklayer. Yeah. Until recently, the baldness that block created on his head was still there when he carries block. It's not that we needed that money, but we were undergoing training. And those training helped me till today to get to where I am. And I will give you two examples of lessons that I learned on the streets that are helping me today. as a vendor, newspaper, then it was Daily Times, Evening Times, New Nigeria, Gaskia, Tafi Kobo, Observer, those were the newspapers then. It comes in a bundle of 100, counted by a machine. Sometimes the machine makes mistake, just like our cash machine makes mistake. So they gave a bundle. The manager gave a bundle to myself and Richard. The name of that guy is Richard. I was in primary school then to go and sell. So we were to divide it 50. A bundle contains 100. So I was to take 50. He takes 50. Then we go and sell and come back. So I counted 50. I gave to him. And we went and sold. Not knowing that the one that was left with me wasn't up to 50. So by the time I finished selling, I cried to my father in the office. So he put me on his bicycle, took me to the manager, and explained to him. Then, I'm talking about the 70s now, there was still integrity, and they allowed me to go. But since then, if I am counting, today is the complete one that I put in the pocket. I give you the balance. It is your business. Whether it is complete or it's not complete, they won't teach you that in Harvard. Now, when I started my stockbroking training, they taught us what they call stop loss. For those of you that are stop loss, what stop loss means that if you are entering an investment, the very moment you are entering that investment, you must set your triggers. When you want to exit, if it's going up, and if it's going down, exit. So you limit your loss, the stop loss. I remember telling them in the class that this is not new to me. When I was selling mangoes, when I start to hawk mango in the morning, by the time it's getting to afternoon and it's getting overripe, I sell it at a giveaway price, and that is stop loss. That I have learned stop loss from primary school. So you are not teaching me anything new. And look, these are things that stay with me, among several other things. But today, we don't want our children to work hard at all. We give them everything. Even things they don't need, we did them. They cannot learn. And what I say, the way I describe them is that we make our children like lions in the zoo. Lions in the zoo just sit down there. You bring meat, he eats. If you don't bring it on time, he will roar. Everybody will run head-tasker and bring it. Put that lion in the wild. He can't hunt. He will just sit down there. He's expecting meat to come. He will see animal passing for. He will be looking at it. That is what we make of our children today. So for us to build future wealth, the emphasis should not be on financial capital. The emphasis should be on the human capital, who are the custodian of this wealth. We must prioritize well-being. A wealth plan without a health plan is incomplete. Families should normalize preventive health care, fitness, mental well-being, and balanced living. Some of us today don't even have time for medical checkup. I do my medical checkup twice a year. Right. You must develop leadership capacity. Prepare heirs and successors, not only to inherit, but to lead. A wealth of money without a wealth of capable leaders is a short-lived fortune. So if we are to reimagine the wealth of the future, there must be a primary focus on human capital, because the human capital is the custodian of wealth. Then reputational capital. In business and in life, reputation is currency, hard currency. You may have financial resources to build a project, but if your reputation is compromised, the doors of opportunity close. Reputational capital is built on integrity, trust, consistency, and values. It takes years to build, but can be destroyed in a moment of negligence. For individuals, reputational capital determines the quality of partnerships, the kind of opportunities you attract, and the legacy you leave. For families, it defines whether your name is associated with trust and honor, or with conflict and scandal. Guard integrity fiercely. Codify family values. Invest in governance. Now, let me emphasize more on family values now. We are still under human capital. The reason wealth does not transfer from one generation to the other seamlessly is because we don't transfer our values to our children. It is our values that enabled us to make this wealth. Our value of integrity, our value of honesty, our value of hard work, our value of transparency. And I see value as a conveyor belt for wealth. You know, conveyor belt moves continuously. And whatever you put on it, it moves it automatically. Now, if you accumulated your wealth with some values, and you have not transferred those values to your children, the wealth will not transfer because the conveyor belt is not there. It will just stay in a place. And that is the reason why we don't transfer wealth today. The values of Wole Abegunde, through which he made wealth, if my children don't have value, that wealth will disappear overnight. And the unfortunate thing today is that we shield our children from those values. We don't insist that they learn those values. In the past, because of the way we were brought up, the values of our parents automatically become our value, isn't it? And that is why they say that remember the child of whom you are. So if you tell me that, oh, Mr. X is your father, I can tell you whom you are. Because your value his value has automatically been transferred to you. And these values are the conveyor belt that keeps moving the wealth from generation to generation. But today, our children picks up their value from social media. They don't inherit our values anymore. They inherit values online. And those values online are different from your own value. And therefore, they cannot transfer wealth into the future. I know that we are all having this challenge with our children. I am having with my children too. And when you try to enforce this value on them, they say all sorts of, oh, your generation is different. We are Gen Z, we are Gen that, and we are Gen D. And if you push it too much, you say you are causing them mental health. I also tell them that your attitude is causing me too mental health. So let's square our mental health. Let's square our mental health. Yeah. So I enforce it. And you know, there was nothing that made me so proud like that one day that, you know, when my children school abroad, but when they come home for vacation, long back, I ask them to come back home with their next year's curriculum. I go to University of Lagos and engage teachers to teach them what they are going to learn when they get back to school. And one day, one of their teachers sent for me that he wants to see me. Have I not paid? I asked my son, have I not paid the school fee? They said, I have paid. Okay, what does he want to see me for? Tell him to call me. So he called me. And he said he just wants to ask me how I brought up my children, that they behave differently from the rest of the class. Look, I spank my children, though, very well. When they don't listen, I spank them very well. There was one of them that went to British International School. He likes fighting. And I would warn him not to fight. I went to the school to meet his principal. I said, look, discipline this boy. I said, no, the school policy. Okay, that one. I put him in my car and brought him home. And I sparked him so badly. That was the last time he fought. We don't do that anymore. When I was a child, my father went to work. You know, in those olden days, they come back home at about 1 o'clock for lunch. In those days, we don't do that anymore. So my father came back home for lunch one day and met me at home. He said, didn't you go to school? My mother, you know, moms are very protective. My mom said, he's not feeling well. Has he had breakfast? He said, yes, and he's not feeling well. Yeah, go and take your... My father drove his bicycle behind me until I got to school. And you know, when he's driving bicycle, you can't be walking, you are running. But today, no, all those things are gone. Those children cannot carry wealth into the future. If you want your wealth to get into the future, you have to prepare them to carry, you have to prepare them in terms of their values. Values. The Yoruba says that, what he says that it is the child that you do not train that will sell your property. That is a proverb in Yoruba. So, for those of us that are accumulating, that are growing wealth, it is extremely important that whoever is going to inherit your wealth into the future, that this same value remains. Because without the value that makes you your wealth, they cannot keep that wealth. But today, there has been ways around this. Because it's a global problem. And shortly, I will get to that. I hope I still have enough time. I don't have enough time. Okay, I'll round up. Then there is social capital. Strengthen family bond, build networks intentionally, contribute to society. So what are the defining features in reimagining the future of wealth? How wealth is defined, your objective, the importance of money, impact, people. For me, my definition of wealth, personal, is the number of people I am able to help to become wealthy. Because the summation of their wealth is my own wealth. Today, if I'm calculating my wealth, I add Wale's wealth to it. And I add Wale's wealth to it. It's part of my wealth. That is my own personal, not the amount of money I have in bank. Right? That isn't much. I'm sure that Wale will have 10 times of what I have. But that is what gives me joy. That I have people I can call very successful enterprises in Nigeria today that came out of Mary STEM. That is my bragging right. That is my words. You need to have your own definition of wealth. Disease eradication, like Bill Gates is doing, it can be an issue of climate. Then, like I said earlier on, because of the problem we are having with value, people are establishing family offices, which is a solution, a single family office or a multi-family office. And these institutions ensure that your children live those values. And they are like a package for your values. And they ensure that it is transferred from one generation to the other, even when your children are not living those values. I have to round up here because I'm out of time. Lasting wealth is not what we leave for our children, but what we leave in them. Health, values, wisdom, integrity, and community. As we reimagine the future of wealth, let us build wealth. Let us build beyond fortune. Let us build legacy that stand the test of time. Thank you.
Can we please give Mr. Begunde another round of applause? That was detailed, thorough, full of so much life lessons. that I'm hoping that a number of us can take away from that. And in response to one of the examples you talked about, well, thank you very much for the opportunity, but your schedule does not afford me work-life balance. So maybe now we have to start reinventing how we work with the new generation coming, the Gen Zs, the Gen Alphas. I don't know that they are willing to be as dogged as the millennials, the boomers, and all the generations ahead, but it's important at the end of the day for us to remember that it's not what we leave them, like he said, it's what we leave in them. So thank you once again for that, sir. Thank you very much. And now, before we transition into the economic outlook, we have a few safety announcements for you. Gents and ladies are located at the pre-function area of LKCC office there. Now, today is not scheduled for any fire drill, so if you hear any fire alarm, it's real. It's not a drill, so please run. But before you run, do not panic. Do not attempt to tackle the fire yourself. However small, inform a staff of the hotel who's nearby. And in the event that evacuation becomes necessary, it's important that you're aware of the following procedures. Remain calm. Emergency response team members, waiters, or any member of the Abuja Continental Hotel management or staff will be able to direct you to the most convenient exit. You must leave immediately in a calm and orderly manner. Our fire exits are clearly marked throughout the conference hall. Do not stop to collect your baggage or any personal belonging. Do not shout, run, push each other. Follow the official voice instructions. Assemble at the fire muster point by the left-hand side of the conference hall or tennis court muster point. Do not re-enter the building. The duty manager will inform you once the building has been declared safe. In the event of a security alert, you'll be told by a member of the hotel management to evacuate to a safe area. Take all belongings with you if possible. In the event of a security alert, if you will not necessarily be evacuated out of the building, but to a safe area within the property. Please do not be with unattended for security reasons. For example, if you need to use the bathroom, please go with your bag, or at least make sure that you're leaving it in charge of someone. That being said, this reminds me of how it's very anti-Nigerian. Whenever we hear panic, our first instinct is to run. Whenever the plane lands, you know how Nigerians typically react. Those at the back are already standing, but there are people in front of you. They haven't even opened the overhead luggage. But yes, this is very, we hope that these safety instructions help and that they do not come in handy because there'll be no fire outbreaks. We have a video for you. We want you to please pay attention to the video. If you look at the screen, and right after the video plays, I'll be coming back to welcome our next speaker to take us through the economic outlook.
As an investor seeking to expand the reach of your wealth, you deserve solutions that balance growth, stability, and security. You need solutions that protect you today and prepare you for the future. These are the solutions we offer you at Cordros Asset Management Limited, a subsidiary of the Cordros Group and licensed by the Securities and Exchange Commission. We have built a reputation for excellence, innovation, and trust, with over 500 billion naira in assets under management and multiple industry awards. Cordros Asset Management Limited remains one of Nigeria's leading asset management firms. But awards and numbers only tell a part of our story. What truly matters is how we help you achieve your goals. Every investor's financial journey is unique, but one solution that gives you access to growth, stability, and professional management, no matter your goal, is our mutual fund. The Cordros Money Market Fund is designed to offer you stability and steady returns. It gives you easy access to money while spreading your investments across secure, low-risk assets. If you're planning for important milestones like your retirement or the education of your children at an Ivy League institution, you should consider investing in the Cordros Milestone Fund. This fund, the Cordros Fixed Income Fund, a strong choice for consistent returns and moderate risk. As for the Cordros Halal Fixed Income Fund, it is a Sharia-compliance fund for ethical-minded investors who want to grow their wealth without compromising their values. So, you get to stay true to your faith and earn low-risk, stable returns while at it. With the Cordros Dollar Fund, growing your wealth in US dollars is simpler than you think. It invests in Eurobonds and USD-denominated assets, offering competitive returns that base the average earnings from a domiciliary account. And the best part is, With Cordros, our all-in-one mobile app, you can easily open an account, explore all our mutual funds, and start investing right from your phone, anytime and anywhere. Plus, the app gives you real-time access to how your funds are performing, so you always stay informed and in control of your investments. But we do not stop at mutual funds. No matter how profitable your business operations are, without the right liquidity strategy, you risk slowing down or missing opportunities. This is why our liquidity management services are designed to help private and institutional clients put idle cash to good use, preserve capital, and still earn competitive returns. We provide structured short-term investment options tailored to your needs through diversified instruments such as treasury bills, commercial papers, and money market placements. We'll ensure that your funds remain accessible, secure, and consistently working for you. For clients who want more customized solutions to expand the reach of their wealth, we provide portfolio management services designed to fit your unique financial goals. With our discretionary portfolio management service, you entrust your portfolio to our experienced portfolio managers. We take time to understand your objectives, risk appetite, then craft a bespoke investment strategy so you can focus on other equally important things while your money works as hard as you do. With no discretionary portfolio management service, on the other hand, you stay in control. We provide research-backed advice, recommendations, and strategy options, but the final decision is always yours. This way, you benefit from expert guidance while retaining full authority over your investment choice. What are you waiting for? Every goal you have, every dream, every plan, every milestone starts with one single step. Take that step today by visiting our website, www.cordros.com, to get started with any of our services.
Thank you very much. You can see that your investment is safe with Cordros, and if you would like to ask questions, we'll be happy to have your questions answered. You can meet me, and I can direct you to the rightful person who can help you with clarity to any of the questions you might have. Now we'll be continuing the conversations this morning, and we'll be looking at economic outlook. Global markets are recalibrating. They're looking at, trends around the world and making decisions. And here at home, we're taking into consideration factors like inflation. We're looking at fiscal policy, energy transition, and a number of these guide the decisions that are made in the living rooms, in the boardrooms, and otherwise. However, the economic outlook helps you to cut through all that noise and get clarity so you understand what the trends are, what the offerings, the opportunities that lie ahead. And right now, we're going to be presenting the economic outlook for 2025. And to present the economic outlook for us, I'll be welcoming someone who brings over 40 years of rich multidisciplinary experience spanning law, finance, banking, strategy, and public policy. He's a lawyer by training and holds an MBA from IESC Business School in Spain and is completing a doctorate in business administration. He rose to executive director at GT Bank before founding RTC Advisory, a firm shaping economic policy and business strategy in Nigeria. He has taught strategy and leadership at Lagos Business School and is widely respected as a voice on Nigeria's political economy. Today, as chairman of National Pension Commission, he is driving accountability and sustainability in the nation's pension system. Please welcome with me the chairman of PENCOM, Mr. Opeyemi Agbaje, who is represented today by the head of research and strategy, Cordros Capital, Jolomi Odongaro. A round of applause as he comes forward.
Good morning, everyone. So I'll be standing in for Mr. Agbaje today, who is on his way.
Apologies for that small delay. So I was standing for Mr. Agbaji today, and I'll be speaking on Nigerian economy and the expected pathway that we see for 2025 and going into the future. And I'll be speaking to the global economy and then domestic economy, then finally touch a little bit on asset classes. So, I mean, the global economy, as we review the performance of the global economy in 2025, it's clear that there have been some positives as we've seen the rapid adoption of new technologies to the green transition, which have started to reshape trade competitiveness as well as the overall economy. However, it's also very clear to see that there have been significant challenges that the global economy has had to face. The reintroduction of U.S. tariffs have impacted global trade flows and redefined exactly the growth path for the global economy. So far, in 2025, we've seen trade tensions, high uncertainty, and low business confidence all impact the global economy, and it's expected that the global economy will expand at a slower pace in 2025, expected to expand by 3%. This is relative to 3.3% in the prior year. There are also other factors that are impacting the global economy, including geopolitical uncertainties. We've seen new conflicts as well as shifting alliances and increased geopolitical risk impact the growth expectations across advanced and emerging economies. Added to that, Global Monetary Policy Administration has been at the forefront of most of the impact we've seen in the global economy this year, with interest rate decisions impacting capital flows, investor sentiment, currencies across the globe, and impacting the growth expectations for both advanced and emerging economies. So moving on, in the global economy, just look at crude oil and our expectations therein. The crude oil market has been quite volatile in 2025. We've seen prices average around approximately $71 per barrel in the year, while also reaching a 4-year low during the period. And the story around crude oil this year has been primarily the supply side. Our supply is outrunning demand. Now, if we look at demand in most emerging markets has remained strong. However, when you look at China and some other Latin American countries, we've seen softer than expected demand. On the supply side, we've seen OPEC start to wind down previously implemented production cuts, while we've also seen strong production from the US and Brazil, which ultimately has resulted in increasing inventories, especially in the US and China, which have pressured prices. Added to that, we've had geopolitical risks, which have been a backdrop to most of the impact we've seen in the markets this year, as we've seen sanctions on Russia, Iran, heightened risk across the trade pathways for supply, especially the Horn of Hormuz and all other factors that have really impacted from the geopolitical point of view. And finally, sentiment has also impacted prices in the year, as the overall sentiment is for a surplus situation, and that has resulted in most of the markets or forward prices really reflecting a bearish sentiment. All of these factors together have impacted crude oil prices during the year, and our general expectation is that prices will average $68 per barrel in the year. This is relative to $61 at the year end 2024, and the average for this year, like I mentioned already, $71 per barrel, just showing that the market is expected to remain quite volatile in the year. So moving on to domestic macros, speaking to Nigeria in this section, and what we've seen in the year so far is that we've seen a cautious recovery in Nigeria in 2025, and this has been supported by bold economic reforms, increased fiscal discipline, and lead to a 3.6% year-on-year growth for the Nigerian economy. Now, this is positive, but remains well below the sort of growth trend we'd expect for the Nigerian economy moving forward. For inflation, we've remained in a highly inflationary environment for the past couple of years. However, we've seen a significant downtrend, especially in 2025, supported by stable currency and lower energy price increases. That being said, those factors are secondary to the primary factor that impacted inflation most in the year, which is the rebasing of the CPI, which initially led to a significant decline to 24.48% year-on-year from 33.8%. Now, looking to the rest of the year, our expectation is that we will remain in the disinflationary trend for the rest of 2025, supported by the stable Naira, which has seen moderate depreciation in the year, stable PMS prices, that's petrol prices, as well as improved agricultural output, which should support food disinflation. Overall, our expectation is that inflation will average 22% for the year, and this is relative to a significantly high inflation of about 33.8% in the prior year. So moving on to the exchange rate, we've seen significant, I've alluded to this or mentioned this in the prior section. We've seen very stable currency during the year, and this has really been supported by significantly higher inflows into the Nigerian economy, supported by the reforms which I mentioned prior to that, most important of which has been reforms to the FX markets. What we've seen in the year with regards to inflows, average inflows as of the August period has been about $4.47 billion, which is about double what we saw over the corresponding period of the prior year, which is settled around 2.21 billion, with most of the inflows coming from foreign portfolio investors, which are investing in Nigeria, given that, on a risk-adjusted basis, the yields on our assets are quite attractive. So looking to the rest of 2025, our expectation is that the currency will remain stable, and we don't expect a significant trend away from the 1,500 currency to support enough ammunition to support the currency, just as inflows into the Nigerian economy should continue to strengthen, provided that reforms persist, basically. So our expectation is that the Naira will settle not too far from the 1,500 level we've seen, and we expect the currency to be 1,550 Naira approximately by year end. So monetary policy, what we've seen in monetary policy administration in recent times, at least since the new administration took office, is that we've seen tight monetary policy administration around the need to temper or tether persistently high inflation. What we've seen is the Monetary Policy Committee increased the monetary policy rates to a record level of 27.5%, while also utilizing other policy tools in the administration of its policy. Looking to the rest of 2025, our expectation is that while monetary policy is expected will remain tight, we will start to see some loosening, provided that the external and internal factors allow for that. So when looking at the internal factors, we're looking basically at inflation, and like I mentioned, we're starting to see a disinflationary trend firm, and provided that we do see an average rate of around 22% for the year, we expect that at least from the internal perspective, that will give the MPC some leeway to start to look at loosening policy. And externally, it comes down to the kind of policy administration that would not temper capital inflows into the country. What we expect, or what we've seen so far, yesterday the US Fed cut its policy rate for the first time in a couple of years by 25 basis points, with the expectation that we will see consecutive cuts over the remaining meetings of the year, which would bring the aggregates declining its Fed fund rates to around 1%. All of this also gives the MPC that leeway to cut the rates. So looking at the internal and external factors that would impact the decision, our expectation is that we will start to see a loosening of monetary policy, even as the rate is expected to remain at record levels. We expect about 100 basis points cuts in the monetary policy rate through the last two meetings of 2025, which should allow interest rates trend downwards. I'll speak a little bit more to the impact on the asset classes that we expect to see in 2025. But finally, looking at the fiscal policy and the implementation that the government has seen during the year, what we've seen is that fiscal revenues have improved quite significantly on a year-on-year basis on account of stronger oil output and improved tax collection. I spoke already to the average production level we've seen relative to the prior year, as well as the improved administration of tax policy that we've seen during the year. Both of these things have come together to allow the government, or have resulted in significant increase in fiscal revenue. And looking at expenditure, we've still seen elevated expenditure from the government, which has meant that even with significantly higher revenue profile, the fiscal deficit has expanded somewhat. And our expectation is that the fiscal deficit will settle around 16.5 trillion. This is relative to the government's own estimate of 13.2 trillion. However, what we've seen in the recent past is that capex spending will likely suffer, and that would reduce the overall deficit, and we may not see significantly larger borrowing profile from the government in the year. So finally, I'll just speak to the asset classes, and thereafter we can have just a few minutes for questions and answers. So I'll speak very briefly, summarily, to the performance and the expectations around the fixed income and the equities markets for the rest of 2025. The fixed income market has been characteristically volatile in 2025. We've seen a significant decline in yields amid a significant decline in the overall borrowings that was supply profile in the market, as the government has borrowed significantly lower than what we saw in the prior year. You recall in the prior year, the government borrowed around 11.6 trillion, and this year that was expected to fall around 7 trillion, but we've only seen a decline from that number, and that has acted to impact the yields downwards, given the demand and supply imbalance in the market. Now, looking at the rest of 2025, our expectation is that we will see yields further decline from this point, and that is really the major factor around there is the discussion that around when we're speaking about monetary policy and the likely loosening of monetary policy as we move forward. Now, if the MPC does cut the monetary policy rate, that is likely to impact the market, just as the demand and supply imbalance is expected to remain. Both of those factors together should impact markets and cause the yields to decline significantly. But we've already started to see that happen in the market. While in recent times, yields were coming down in the first part of the year, they started to go up thereafter. But the expectations around monetary policy administration and the cuts from the US Fed yesterday resulted in the market coming down yesterday and is likely to persist through the rest of the year. Our expectation is the average yield on Treasury bills and bonds will settle around 18.5% and 16.0% by the end of 2025. Now, finally, we'll just speak to the equities market briefly. We've seen very strong performance in the equities market in the year so far, as the NGX ASI has recorded a 7.5% increase on a year-on-year basis, and we've seen strong performances across most sectors. The charts on the bottom left-hand side shows you performance across banking, consumer goods, industrial goods, insurance, and oil and gas, with only the oil and gas sector recording a decline to the corresponding period of the prior year. And the factors that have impacted the markets, I mean, we've spoken about them during this presentation. We've seen bold reforms being implemented. We've seen the markets, the Nigerian economy gain strength, even as growth has not really hit that level that we would expect for the medium-term growth expectations for an emerging market economy like ours. And we've also seen that companies' outturns have significantly increased on a year-on-year basis. All of these have impacted the market positively and led to that significant growth on a year-on-year, as FX stability, stronger corporate earnings, disinflationary trend, as well as the expectations around the rate cuts, which tends to be have a binary impact on equities market. If yields are lower, we tend to see the market's activities or flows trend towards the equities market from larger corporate investors. So all of these factors have impacted the market. I mean, looking at the fixed income and the equities markets, and the macroeconomic indicators that I discussed earlier, it's clear to see why the markets are performing the way they are and the likely trend in the market going forward. So while the fixed income market yields will be lower, right, the investors in that market are likely to see strong returns, while in the equities market, lower yields in the fixed income market are likely to impact the market more positively in the tail end of the year, just as corporate earnings profiles will also be a positive tailwind for the market. Our expectation is that the market will return 55% in the year in our base case. So, I mean, this is just a summary chart of our expectations across the different sectors, and you can see that in general, the expectation is mostly positive, save for the downstream oil and gas players, which have been impacted by the reforms in the downstream oil and gas sector, which has seen higher premise prices, improved supply, and resilient demand outweighed by intense competition and increased cost pressures. But overall, it is clear to see from this chart as well, buttresses the point from the other one, where we see that our expectation is a strong performance for the equities market in 2025. So thank you very much for listening, and I can take any questions that we have.
Thank you very much, Jolomi Odongara, for that presentation. We'll be going to the audience to take a few questions, but there'll be a QR code on the screen. If you'd rather type your question, please scan the QR code and type your questions in there. But I can take a few questions from the hall. So first few people to raise their hands. 1, 2, 3. Okay, 1. Who's next? All right, you ask your question, and then I'll come back to take a few more. Do we have one here? All right. Please, your name and then your question.
All right, thank you very much. My name is Sheon Oluwabumi, I'm a lawyer. My question is actually directed to the keynote speaker, the person that spoke before you, sir. Okay. Yes, he said something about transfer of wealth, family transfer of wealth from parents to children, and can I go ahead? Yes, transfer of wealth. Now, we live in a globalized world, and a lot of things have changed. There are new dimensions and new dynamics in the concept and transference of wealth. And I know that in this present dispensation, most people do trusts. They do more of wills. They do more of trusts. So I just want to find out which one is more sustainable and which one is more not sustainable, really. Yes. Thank you. That's my question.
Yeah, I didn't have enough time to get to that point in my presentation because I ran out of time. Otherwise, I will have emphasized on that. In transferring wealth, it depends on how you want to transfer your wealth and whom you are transferring to. Transfer of wealth doesn't have to be to your family members, right? In fact, for, I think, was it Bill Gates or this Omaha guy that transferred of his several billions of dollars, only transferred $10 million each to their children. The others were transferred to other causes. And this brings me back to what is your definition of wealth? What is your objective of accumulating wealth? That is what will determine how your wealth will be transferred subsequently. Yeah, your family will not be left out of it. Will not be left out of it. Some people believe that they worked hard for their wealth, and their children also should work hard for theirs with some support for them. However, in terms of the best way to do it today, people are using family office. With a family office setup, you can codify everything about you into the family office. and in an institution ensures that your wish and your values runs across several generations. You have the likes of Ford Foundation in the US. Even back in Nigeria, you have the T.Y. Danjuma family office. You have the 10 Gen for Ike Imokode and Herbert Wigwe. I know that Tony Elumenu also has his own family office. There are several family offices. But in terms of will and trust, I think the trustee here will be in a better position to explain to you because it's a legal issue. But from my understanding, the best thing is for you to hand over your asset to a trustee through a living will. And your asset will be transferred to them. It cannot be challenged. Nobody can go to court and go and challenge you because those assets are no longer in your name. You have transferred it to a trustee company, so it's a trust. And the trust manages this asset for you. So it ensures that an institution is behind your wealth, as against an individual or a number of individuals that have their own vested interest are behind your wealth. But the best person to answer this question is the managing director of Cordros Trustees. You want to add to it?
Thank you very much. Can we please put our hands together? But can we put our hands together for Jolomi as well? Jolomi has done a great job with the presentation. Thank you very much, Jolomi. And at this point, to sort of come and sum up the presentation that Jolomi has made, and just to also mention that we'll take a few more questions, please a round of applause as I welcome the National Pension Commission Chairman, Mr. Opeyemi Agbaje, as he comes forward to summarize the economic outlook for us. Please a round of applause for him. Thank you. And then we'll take a few questions. So we have the QR code. If you'd like to ask him any questions, please scan the QR code, tell us your name, and then ask your question.
Hello. Good morning. My name is Opeyemi Agbaje, and I've usually described myself as CEO of RTC Advisory Services. I'm learning about Abuja. I am acting chairman of the National Pension Commission. Don't let the senators hear that you called me chairman. So I'm not going to take you through any, maybe they can display these slides, but I'm just going to speak to what I had to share. I hope they can share the slides with everybody. So I titled my session, I don't know what Jolomi has said, but I titled my session, The Evolving Status Quo. Is Nigeria rising? That question speaks to the message I sought to pass. Those who have listened to me in the past will understand why I spoke about an evolving status quo. We had a status quo 2023. And I think in the Wealth Summit by Cordros, the previous one, I spoke to that status quo. And we all lived that status quo. It was a status quo of suboptimal economic growth, the absence of economic reforms, minus the passage of the PIA, which was not implemented. So it might as well not have been passed in 2021. All macroeconomic indicators were suboptimal. And then President Tinubu came in on May 29, 2023, and he engaged on some bold, maybe drastic reforms. On day one, we all know he canceled the fuel subsidy. A few days later, he liberalized the FX market and unleashed an era of massive macroeconomic volatility. I would add the words natural, given that, yes, if you don't want me to go through all the slides, I should. So given that we had frozen reforms for maybe a decade, almost a decade, and the gravity of the economic changes we were trying to force through within a very short time. I think that my perception of the data is that we are turning a corner. The data virtually all speak to stabilization. I know there are many Nigerians who are angry at the idea that Nigeria's economy is stabilizing. I wonder why. But you are business people. I presume you should be pleased that the prognosis is that we are stabilizing FX reserves. FX rates have been stable and even appreciating. Inflation has reduced both by methodological actions and substantively to 20%. For whatever is worth, we can begin to expect some lowering of interest rates. GDP is growing, modestly yet, but is growing even by the rebased and slightly bigger economy figures, GDP figures. Trade surpluses are consistent and growing. What else? So the data is unambiguous that we now have stability. Now, stability is not the same as recovery or full recovery, but at least if you deny that we have stability, there's something else you are looking at and not economic statistics. CBN thinks we will grow GDP this year by 4.17. Debt to GDP ratio is down because GDP is up by 34%. External reserves, of course, $41 billion. So the data is unambiguous, like I said. And if you, even the IMF is revising upwards its growth expectations for Nigeria. Because again, like I said, the optimism is justified. I had a conversation on the base GDP, but I think you know what has happened. Sectors, I have that slide about sectors, and it's remarkable. It's still suboptimal in my view. But most sectors are growing, virtually all, except for the one called other sectors. But the growth is clearly suboptimal. Agriculture, 0.06. Mining, 2.96. Manufacturing, 1.69. So there are many sectors in which growth, and that's when we can then talk about recovery and or full recovery. So, of course, with the GDP rebasing, the key observations are the size of the real estate sector, the introduction of some new sectors, pensions, NSITF, so many digital services. So overall, I think that we have evolved, and that's why I speak of an evolving status quo. The status quo has evolved. Now, those who understand scenario planning can detect that I have some scenarios in mind, and I've called one the evolving status quo. I have operated in a 3-scenario framework, and we are not yet in my second scenario, which is Nigeria rising. And that's why I've not yet jumped. I've said we're evolving. So my suspicion is that we're in transition to Nigeria rise. And what are my critical attributes of Nigeria rising? When will I think we've crossed to Nigeria rising? When GDP growth in my framework crosses 4.5%. Then I'll proclaim that Nigeria is rising. There will be some other things that will happen when GDP growth crosses 4.5%. FDI in non-oil sectors will be growing aggressively. Right now, FDI in the oil and gas sector is growing aggressively. In the Nigeria evolving status quo. But when I see FDI in infrastructure, in services, in industry, and booming, it will be in addition to GDP growth above 4.5. Actually, the target is GDP growth for Nigeria is in between 5 and 7%. But the transition point, in my view, will be 4.5. I think we may do 4 this year. So it's not yet transition. But we would, when we cross 4.5 and I see that we're headed to 5% growth, 6, 7, 5 to 7, then President Tinubu can proclaim that Nigeria is rising. FDI will be booming, cross-sectoral GDP. Unlike those suboptimal sectors, you see manufacturing grow by 6%, 7%. All the service sectors, you see more broad-based economic growth. I think that's where we're heading. And so I speak of evolving status quo. I speak of course, reserves will be crossing $45, $50 billion. And we may even see, of course, exchange rates to be stable, but they could even be better than what we have today. Like I said, I think we are heading in that direction. But there are risks, which is my third scenario. There are unforced errors that we could commit, and if we push them to their absolute conclusion, they would then create a third scenario, which I call over the cliff. And the reason I say over the cliff, we have this game that politicians play in Nigeria every 4 years. We threaten to push the country over the cliff. And when we get to the end, well, when you are playing those kind of games, sometimes the thing could backfire. You could actually put yourself over the cliff. So what are the risks? Fiscal, of course, the most significant economic. Okay, social. Let me start from the social. So we all acknowledge that one consequence of the bold and courageous and necessary reforms of President Tinubu is an increase in poverty, social marginalization, increased social tension, cost of living crisis. It's a reality. And we can concede that we should have planned better for that crisis. because, hey, there were predictable consequences of the reforms we were going to do. And we were clear in our mind that we're going to do those reforms. But we're trying to catch up. When I say we now, I'm talking about the country. And I've always spoken like this. It's not because I'm acting chairman of PENCOM that I'm saying we. I've always owned Nigeria and Nigeria's economy. I've always said we. Even when I'm talking about something bad, we are messing up. We're endangering this country's prosperity. I've always used the adjective, or is it an adjective? I've always said we. So we are trying to catch up. We're doing NEL Fund for university students. We're trying to create a credit culture. We're doing conditional cash transfers. We're doing free technical education across all federal technical schools. We're trying to catch up on the social side. But we're starting from a very bad place. So we have a lot of catching up to do. My major advocacy has been that we just look at every sector and say, what can we do to ameliorate poverty here? What can we do to create employment here? And we just keep kicking them in until we see a notable dent in poverty and we think things are. So that equilibrium on the social side is far off, but we have to work at it. And I think that we've just started. I think we're starting, and I think we should continue. So social, then fiscal. Fiscal risk, of course, continue, and as we try to develop in a fiscally challenged economy and be doing a lot of big infrastructure projects and trying to build Lagos, Calabar, and trying to build Sokoto, Badagry, and try to fix every road in Nigeria. At the same time, obviously, we're going to be challenging our fiscal capacity. And fortunately, for those who are focused on data, GDP expansion has lowered the debt-GDP ratio, but revenues and core debt revenue. So there are issues. But then we've done tax reforms. We think that revenues will grow. We have recently announced historically high revenue figures. So again, Mr. Edu can argue that he's dealing with the fiscal challenges. And he may be correct. And then political and insecurity risks. Of course, we know that elections tends to escalate political risk and security risk. So we're in the cycle in which those risks will rise. And you can detect it in the language of politics. You start hearing, as we did a week ago about revolution, we start speaking in hyperbolic terms. Nigerians are suffering. And then we start introducing religion and ethnicity into politics. So we can expect an increase in political risk. And there's also a link between politics and insecurity in Nigeria. So we can expect insurgency and terrorism and all of that, right? Anyway, so those are the risks. And if we push them to their logical conclusion, we can move into an over-the-cliff scenario. My bet and my hope is that we choose Nigeria rising. So in terms of outlook, I think we're heading, like I said, from first a status quo that was terrible to an evolving status quo that has evolved, and then to Nigeria rising, hopefully. And that summarizes the outlook. That also summarizes the three scenarios that I think we're faced with. I think that the thing to note with the negative scenario is that it revolves around politics, security, and how we treat social issues, poverty, unemployment. I'll be happy to take
Questions.
any questions.
Can we first
Thank
of
you
all
very
give a round of
much.
applause? Thank you very much, sir. So now, in the interest of time, we already have questions, sir. Okay. So I'm going to just I'm going to limit myself to those who already sent their questions via the QR code. Yemi Adediran says, we are currently experiencing some stability in the foreign exchange market. But what do you think is the true value of the Naira? Do we see a rate below $1 to 1,000 Naira? What indeed is the true value of the Naira? He says, we have experienced some improvements in the macroeconomy, but the microeconomy is still struggling. What will it take for these positives to begin to trickle down to the man on the streets?
Let me first of all, let me confess. That's a confession in Nigeria. Let me confess, I supported both of those policies that I thought were necessary and that I still think were necessary, but that caused a lot of pain for our people. And well, when I said we should liberalize the currency, I didn't think that we will go higher than 750 naira to the dollar. So when you ask me what the true value of the naira is, you are setting me up for, but I don't think the true value of the naira is drastically, I don't think it is 500 or 600 or 700. I don't think so. I think it's not that far from where we are. I think there should be some appreciation. I don't see it. If I take from the direct question, I don't see it better than 1,000 naira to the dollar. I'm not even sure if that is desirable. One of the biggest opportunities we have, and that is already manifesting, is to grow our export base. And that won't happen at a subsidized exchange rate. So if I take the questioner's direct question, do I see it better than 1,000? I say no. But I think that if we continue to strengthen reserves and FDIs are beginning to kick in, not just portfolio investment, and this broad-based FDI, not just oil sector, we will see appreciation in the market.
All right, speaking about FDI, someone here has a question and needs clarity. The person says, does domestic investment include remittances by Nigerians living abroad, or is that FDI?
Remittances are different from FDI, but they are an important part, and I should have mentioned them, but they're an important part of sustainable flows into the Nigerian economy. And I recall that in the Obasanjo-Soludo era, they were a powerful part of why for some years we had a stable exchange rate, and with CBN did not really need to be funding the market. So yeah, the remittances are important, and I think they are already important, but what is lacking right now is FDI. FDI in oil and gas appears to have revived, but not outside oil and gas. And so when FDI, the sign for me that we have a sustainable exchange rate, I'm just seeing that Wale is the one sitting there. I'm sorry, my brother. When we see FDI, broad-based FDI, that would be the signal for me that we are heading into Nigeria rise and that the exchange rate may be sustainable.
This person has a two-part question, but I'll ask the second part. It says, how is the knowledge and inclusion of ESG in today's businesses influencing investor interest in Nigeria? And they also want to know if electric vehicles, if you see Nigeria shifting to electric vehicles within the next 5 to 10 years.
Electric vehicles. Electric vehicles. They should not pick that one, no. Let us first solve the problem of electric houses, electric homes, electric factories, before we have electric vehicles. I think and I may mention that. I think one area where I've not yet, and I say this at the risk of annoying somebody, I have not yet seen a comprehensive strategy is for electricity. That how are we going, let's answer the question, how are we going to transform this sector? One big constraint is that tariffs are a part of the problem. And Nigerians don't want to hear about tariffs. Band A safe, they only manage to get through it. And one day they will have to do band B to C to D to E to F. But even if I was the one, I won't do it before 2027. So, hey, there have to be trade-offs, policy trade-offs. Now, so that's on electricity. The other one was EFTs, ESG. We need, one thing I know that will help our markets is the perception of transparency and integrity. So let our markets be perceived, and the SEC organs are here. Let our markets be perceived to be transparent and corporate governance strong. And there's some ethics around market regulation.
That would be all that we can take now. Can we please give a round of applause to the acting chairman of the National Pension Commission, Mr. Opeyemi Agbaje. Thank you very much, sir, for summing up the economic outlook for us and being gracious enough to take answers to our questions. And our next conversation takes us right into the heart of today's journey. The reason we're here today is because Cordros thought it was important to pull us all together and talk to us about reimagining the future of wealth. But we wouldn't have had this conversation without Cordros, and Cordros wouldn't have existed without a vision. This vision would have not been carried without a man, and I'm going to welcome him shortly. This vision has, of course, been steadily nurtured into financial service powerhouse, this financial service powerhouse that we see today that has 6 subsidiaries and a solid footprint in Lagos, Abuja, and Port Harcourt. Now, guiding us through the journey of Cordros is a consummate entrepreneur and investment banker, bringing specialist expertise in securities trading, asset management, and investment banking services. He's a lawyer by training, an unauthorized dealer of the Nigerian Stock Exchange, and a fellow of the Chartered Institute of Stockbrokers. Over the years, he has built an extensive global network of institutional investors, high net worth clients, and market players across diverse financial markets. Under his leadership, Cordros has grown into a trusted partner for wealth creation, capital market access, and investment advisory, not just in Nigeria, but with reach and influence that extends far and beyond. With a loud applause, please join me as I welcome our chief host, Mr. Wale Agbenyongi, who is, of course, the group managing director and the CEO of Cordros. Can we please give him a loud ovation? Thank you.
Thank you very much. It's a full house. Okay. Cordros Wealth Summit 2025. Please, let's give a big round of applause for everybody for coming. Yes, I want to thank all our clients in Abuja and the whole of the North for coming for this summit. We started our annual Cordros Wealth Summit in 2023, and this is the 3rd edition. And last year, when we had the 2nd edition in Lagos, some clients came from Abuja and requested that we shouldn't exclude them, in spreading this word, and that we must indeed have this summit in Abuja. And of course, we answered that call, and we are here in Abuja. And I promise you that this will be an annual event in Abuja. The Abuja and the northern business is a very important part of our business. The northern business gives us about 25% of our entire business, so we cannot ignore the importance of this part of Nigeria, and we want to take this very seriously. But briefly, I just want to be able to guide you and to inform you about this company called Cordros. A lot of clients don't know so much about our journey and how we started. But we actually started in 2007, so we're 18 years in the business. We started as a stockbroking business and moved to acquire an insurance license in 2013, acquired a fund management business in 2014, and we just kept growing and never stopped, and moved to have 6 subsidiaries within that group. All thanks to you, our clients, who have always been with us. So I want to thank you all for where we are today and the journey. We have 6 businesses within the group. Cordros Securities, which you all know is a security trading business. We buy and sell shares and buy fixed income instruments for our clients. We are the 3rd biggest stockbroking firm in Nigeria as of June, and we continue to grow. We have partners in the UK, in South Africa, and Americas, where we trade for our clients. We have a Cordros Asset Management, which is our host today. We manage assets for our clients. We have substantial assets under management. We have Cordros Trustees, which is also a very big subject matter for today, where we manage, how clients can acquire their wealth, transfer it to the next generation. We protect you against risk, Cordros Insurance Brokers. And we raise capital for businesses, for the big businesses in Nigeria. And we recently got approval of SEC to change our name from Cordros Capital for that business to Cordros Advisory Services Limited. And of course, we keep records for shareholders through Cordros, registrars. Our directors were chaired by a very honorable gentleman, Charles Osezua, Engineer Charles Osezua, ON, and other directors. And we have one of our directors here representing our directors, Mr. Ike Egoga. Please stand for recognition. One of our directors. Thank you very much for coming. And we have very, very strong, management team. I think Cordros has been blessed with, very, very good people that manage Cordros. Some of them are here, and we've enjoyed the great support of very brilliant people working Cordros. And I would like to introduce some of them to you, if they are here. First, let me introduce, the person who's hosting us today in the name of Ms. Fatima Okpalaji. Fatima is the head of our northern business, Abuja and Kano. So I'm sure a lot of people know her. Fatima, thank you very much for a good job you are doing here. And thank you. Please, let's give her a very good round of applause. I also have the Managing Director of Cordros Securities, Kristen Orajekwe, if he's there. Kristen, please. Kristen is the MD of Cordros Securities. For people who trade with us, we know that we're the 3rd biggest broker in the market. So there's no big transaction that happens in the market that Cordros won't be involved. So thank you, Cordros, for this service. I have Mr. Gbolahan Aina. Gbolahan is very popular in the office. That's what happens every time. So Gbolahan was the MD of Cordros Asset Management, been with us for well over 10 years and doing a very great job. Thank you, Gbolahan, for a good job. I also have Mrs. Ofoluwasho King, Managing Director of Cordros Trustees. when you're talking about how to transfer your wealth to the next generation, how to write your will, how to do your trust, all the things that Wale said today. If you want, know anybody who can do it for you in Cordros is Mufulusho King. Thank you, Mufulusho. I think we also have Doyin Sola Ola. Doyin Sola is the managing director of Cordros Wealth. This is a subsidiary of Cordros Asset Management. So we've had, quite a lot of, interest from our wealthy clients. Of course, we're all wealthy, who have asked for us to take care of their special needs, how to guide them, how to arrange their wealth, how to know what to do when transferring, when to retire, how to keep, their lifestyle the way it is. And of course, Doyin Sola does that very well. Thank you, Doyin Sola. I don't know if there's anybody here that I haven't recognized. I mean, those are the bulk of, our management team that are here today. For where do we do business? We are primarily in Lagos. We have about 4 or 5 offices in Lagos. Lagos and Lagos mainland. We have an Abuja office. We have an office in Port Harcourt. We have Miriam from Port Harcourt. She manages our Port Harcourt office. And we also have an office in Kano. Dauda, if he's here as well. So we, pretty much, have almost all the zones in Nigeria covered in terms of, what we do. And we are a very, very strong business in the terms of quality of asset that we manage. As of June last year, we have 550 billion naira under management. All your funds, that we take care of. And we take this, very, very seriously in how we manage those assets. And we have grown, quite rapidly in the last 1 year. And last year we were about 300 billion. So this year we are 550 billion, thanks to you. We hope to close this year with about 650 billion. And definitely next year, by God's grace, will be 1 trillion asset under management. So we won a lot of awards in the market. And Cordros, we are like our clients. You won't really see us make so much noise in the market space of what we do. Pretty much just like our clients. You won't see our clients who also want to be seen, showing what they have. So, but we only go for credible awards that we don't have to pay for. So there are a lot of awards that people pay for in the market. So we get recognition from people who are, who give recognition to whom is due. So we won quite a number of awards, in recent times. In 2024, we're the financial advisor with the highest deal flow in debt transactions in West Africa. At 2024 Deal Makers African Awards. I won quite a number of NGX awards, on and on, on and on. Our future outlook, just like I said, is for us to have 1 trillion under management. And of course, we want to go global from next year, giving access primarily to our clients to be able to trade the global markets. But before I close, I would like to give appreciation and thanks to people that were invited today. Let me start first with our keynote speaker, Mr. Wale Abegunde. Please join me to give Wale. Wale has told everybody that I employed him in various steps. He says it every time. But, Wale has been a very fantastic big brother to me and a very big mentor to Cordros. We worked for 4 years, but those 4 years were like 40 years, where, Wale is a good visionary person. And Wale will tell you what will happen 10 years from today, and you can take it to the bank. I remember when we started in Meristem, when the market was opaque, we were the only brokerage firm in Meristem them that will issue contract note and send it to clients. We're posting it. We're posting contract notes to clients, which never happened. Now, when you trade today, within 30 seconds that you trade, you get an email from Cordros that your trade has been done. That's what it said 20 years ago. And, we used to type, transactions, there was no electronic system then, and now everybody does it. And apart from that, we share very great bond on how the market should be. And I'm very happy that, when we call him today, he didn't even let me finish, asking him to be the keynote speaker, and accepted. Please, again, let's thank Wale Abegunde for the good job today. Thank you very much, Wale. And of course, I also want to give special thanks to the DG of SEC, represented by Mr. Executive Commissioner Operations, Mr. Bola Jomale. I think he's, just taking some time off. The DG is someone that has also been part of the Cordros journey from the beginning, way from the beginning of Cordros. Dr. Timi Agama has been a very good friend and partner. We used to talk a lot about how the market should be. And I used to call him, a revolutionary then, because he used to talk about what should happen. And this is what is going to happen when I become the DG. And now we've seen a lot of reforms in the market. Nowadays, as operators, what we can see, when you file application with SEC, 14 days, you get an approval. And he's a man who is promoting, a liberalized market, a market full of governance, a market of growth. And that is why when other people were saying that crypto should not be traded in the market, and Motimi has been doing that since, way back. So, in absentia, please, I want to thank Dr. Motimi Agama for supporting Cordros and for being part of this. And of course, Mr. Jomale as well, Executive Commissioner Operations. He's been a very good friend as well. And of course, while he was on the other side as an operator, as CEO of NASD, we engage regularly, and of course, I'm not surprised when he was called to do this job. Thank you, Bola. And of course, for our eminent, speakers today, let me start from Andre. Thank you, Andre. We're going to hear his perspective about second citizenship. And Ms. Mutiat Bello flew all the way from Canada to be part of this today. So thank you very much, for coming to be on the panel. And Mr. Koyemi Agbaje and, Suleiman, right? Thank you for coming. And for everybody who's there today. And we are going to the last part of this, program today. We'll be back next year. I want to thank you that, please let's give a round of applause for Bola Jomale as walking in. Thank you. Yes, you were not around when I was, talking about all the things you've done to help us in the market. And of course, Dr. Agama, and of course yourself, being a very great supporter of Cordros, even before you joined, SEC. So I want you to have a very good time, a very informative session that we are going into. I thank you very, very much for your support for Cordros as a brand. And you can be assured that, our job is to ensure that we grow your wealth, and you're a critical stakeholder. When you have a company like ours, if we are a very profitable business, thanks to you, we also desire that your wealth increases a great deal. If we are making money, and you are not making money, we haven't done a good job, right? So if we are making money, you are making money, the government is not making money if we are not paying tax, and you are not paying withholding tax, we will not have done a good job. So I want you to know that we want to continue to build on that trust, that you have given to us since 18 years ago, and we're not going to stop. We're not going to break that trust. We want to ensure that we continue to promote that platform, that will give you access to the market, not only the Nigerian market, to the global markets, to enable you, manage your wealth. Quite a number of, of our clients have come from Lagos to attend this event, so I want to thank you that, we also have not excluded you from today's conference. So once again, thank you very much, and, have a very lovely session as we close this. Thank you very much.
Thank you very much to the Group Managing Director of Cordros Capital. Thank you very much, sir. I saw a quote somewhere that says, coming together is the beginning, staying together is success, and it's basically progress, right? And why that quote was important to me was because even in marriages, you would agree that when you see people who celebrate 50, 60 years, it's a thing of joy and a thing of wonder that they could stay this long together. And for everyone that our GMD has appreciated, you didn't just start with, a number of you didn't just start with Cordros, you've stayed through the journey. So thank you for staying with Cordros. And we look forward to seeing the collaborations that will happen from here. We hope that it doesn't stop from here, but it even gets better from here. And now to talk to us, we have the overview of the wealth management industry. And to share with us that, I'd like to welcome the Managing Director of Cordros Asset Management. He has over 18 years of expertise in corporate strategy, investment research, corporate finance, and portfolio management. With a career spanning ICO Capital and Lead Capital, he has advised on restructuring, financial strategy, and capital market transactions, while also being a trusted voice on economics and the financial markets. Please welcome with me the Managing Director of Cordros Asset Management Limited, Bola Aina, as he comes forward.
Okay, thank you, Olive, and thank you everybody for coming all the way. I know a lot of people flew in from Lagos, some people even flew in from out of the country. I want to say a very big thank you. Some people flew in from the northern region as well, Kano precisely. So thank you very much. So my presentation is very short, just to set the context for the panel session. And it's going to be a very interesting panel session. We have sort of a wide range of experience, and wealth is holistic. And just looking at the different aspects of wealth in the panel session. So for me, I'm going to look at the wealth management industry, how it has spanned within the last couple of years. And this is very important to us because a lot of us fall into that bracket. Some of us manage money for people in that bracket, and some of us are regulators for people in that bracket. So it's projected that the asset under management for the wealth management industry is going to get to $1.1 trillion by 2018. And this is quite instructive. If you look at the trajectory, as at 2019, it was $107 trillion. And as at 2023, it was $129 trillion. But of course, we all know the story. A lot of the wealth is concentrated in America, in North America. And Africa's contribution, even though it's growing, not as significant at the moment. But interesting thing is that some of the wealth, even in North America, are from people in Africa because we invest with the fund managers. So also to mention that in terms of the asset splits, so we have a lot of investments in mutual fund. As of 2023, $60 trillion was in mutual fund, 48.5 trillion was in mandates. By mandates, I think like discretionary portfolio, your execution, and just about $15 trillion in alternative assets. And the alternative assets is growing quite rapidly. Alternative assets are things like your Bitcoin, your stable coins, your private equity. Those are alternative assets. And this is very also important because in the next couple of years, we expect to see what you call the great wealth transfer. I know some of us might be hearing it. So about $83 trillion of assets is going to move from the baby boomers to the millennials, the Gen X, the Gen Alphas. And you know, this generation, they think differently, they invest differently. A lot of them are what you call digital natives. And as fund managers, you need to understand their thinking and how to be able to meet their needs. Client assets. This slide just shows market segmentation. And interesting to know that the HNI, the high net worth individuals, control most of the client segmentation. As of 2023, there are 116 trillion in terms of assets, while pension assets just at $9 trillion, insurance companies $36 trillion, while sovereign wealth fund $11.8 trillion. So for everyone that falls into the brackets, definitely an important segment that we can't afford to ignore. And we expect this to grow over the next couple of years to $408 trillion. And what we are doing today is really serious business, managing people's money, and very important that this money or this wealth is going to grow over time. So mass affluent, 30% in terms of client segmentation, HNI is 36%, pension asset 19%, insurance company 11%, and sovereign wealth fund 4%. To just mention a few data as well, how has wealth grown over the last couple of years? So from 2023 to 2024, we saw the North American region grow by 8.9%, Asia Pacific by 4.8%, Africa by 4.17%, Latin America declined to negative 2.6%, while Middle East declined to 0.96%. I know a lot of us will be excited by the African data, but of course, you know, if you are low, you need a lot to also increase. So even though it's better than a lot of the other continents, but in real time, in absolute terms, it's not that significant. In terms of population, how are we seeing increments into this wealthy class? 7.3% in North America, Asia Pacific 2.7%, Africa 3.8%, while Latin America and Middle East experienced decline, negative 8.5% for Latin America and Middle East, negative 2.1%. To mention a few things as I begin to round up, the ultra HNI, they are classified as people that have $30 million and above. I know sitting in this auditorium are several people that fall into this category. If not yet, it can be an aspiration for us. And these investable assets, not even just what they own. And they own 34% of market share. In terms of numbers, just 234,000 people fall into this number. So just 1%, the popular 1% I will talk about. The mid-tier millionaires have 2,162 people in this category. And these are people that have between 5 million and 30 million in investable assets. In terms of market share, 23% of market share. While the millionaire next door, even though this is significant, but in this category, they are still upcoming. So therefore, 3% market share at the bottom of the pyramid. And we have 21 million people in this category. And I think this is very important for us because oftentimes we just focus on people at the top, but sometimes there are people that are aspiring, mass affluent, and they are moving from that mass affluent state to being an ultra HNI client. And as I begin to close, how have they invested over time? This shows their asset allocation. And we are seeing a sort of shift in alternative assets. As at 12 years ago, just 10% was in alternative assets. But as at last year, we have 50% in alternative assets. And that means for fund managers, you need to begin to think of how can you create more alternative assets. Equity has also increased from an average about 20%, it was 22% last year. And of course, we all know that there was a global rally last year. Some of the popular names, Tesla, Nvidia, the Alphabet, those sort of companies in the US who are the rally that we saw. I'm also seeing significant increase in real estate as well, and I'm happy that today we'll be talking about real estate in the panel session. I think it's an asset class I can't afford to ignore in terms of inflation hedging benefits, diversification benefit that it offers as well. So in closing, I'll just talk about performance of passion assets. And it's something that I'm passionate about, even though I can't invest in it yet. So I'm more like an enthusiast, not a collector or an investor yet. But to interest you to know that some of the passion assets have even outperformed the S&P 500. I saw a comparison of the AP and with the S&P, and there was an overperformance. Even though from 2022 to 2024, we saw some decline and some market correction. I know a lot of us want to enjoy the good things of life, but I'm here to tell you that I can also earn from the good things of life. Some of us have been leaving money on the table. But some of the performance, if you look at handbags, so not all the handbags, like Hermes, for instance, over the last 10 years has done 85.5% return. Jewelry, coins, some people collect coins, some people collect stamps, has done 47.15%. Then watches, Patek Philippe, Richard Mille, those sort of watches as well, have done significantly over the last 10 years. I think I got interested in this when somebody tried to sell a wristwatch. I thought that wristwatch was going to be, at most, maybe 5 million naira. and I saw it pricing for like $60,000. I'm like, what? And the guy told me I bought it for like $20,000 maybe a couple of years ago. But some people actually deal in some fashion assets, and there's furniture as well, whiskey, wine, and art. But these assets offer value because of their rarity. You don't see them a lot. Maybe every year they just create a certain amount, and that has created demand for those assets. So I'll just take this very quickly in the next 1 minute. So what are the sort of trends we are seeing? And one is similar digital experience. One is hyper-personalized advisory. We are seeing bridging of generational gaps. I mentioned the great wealth transfer. We are seeing inorganic growth strategies. This will, I think, expected to shape the industry this year and beyond. Then there's a sort of regulation drive towards ESG products. There's digital onboarding, unified operating models, generative AI, relationship manager, efficiency, then real-world asset tokenization, cloud-native wealth management platforms. So some of these things might sound alien to some of the firms in Nigeria, but these are sort of the realities that we are finding ourselves. And to mention, because there's a table on my right and shows the priority matrix. And to try to know that number 1 and 2 are the most significant in terms of adoption priority and business impact priority. And both speaks to customer experience. So even though you have all the good products and your customer experience is not good, you can offer good service to this target class. So customer experience is very important. Then personalized advisory is very, very important. So thank you for listening to me, and we'll be starting the panel session very soon.
Thank you very much, Adebola Aina, for that very interesting report there. It's an outlook that I think would inspire a number of investments and purchases. I think I found one particularly interesting, because those of us who knew the song that was, interestingly, so it's not the one that you think, oh, because I'm trying to cut my coat according to my cloth, not my size. When I saw that, and I saw that watches 125.1% in 10 years, I realized that when Mike Okri released the song Time Na Money in 1989, he was being prophetic, because time, wristwatch na money. All right, it's time for us to get into our panel session, and this time we're looking at the importance of holistic wealth, new perspectives on values, success, and financial well-being, which was a conversation that started when we had our keynote speaker talk to us. He gave us a holistic conversation that sets the tone very well for the panel session that we're about to have. And I'd like to welcome our panelists to join me on stage. First, we have an accomplished wealth management professional with over 17 years of experience spanning portfolio management, investment advisory, relationship management, and business strategy. She has built a reputation for driving business growth, leading high-performing teams, and driving results that make a lasting impact for clients and institutions alike. Please join me as I welcome the Managing Director of Cordros Wealth, Doinsola Ola, as she comes forward. A round of applause for her. And up next, joining her, we have a Portuguese lawyer with over a decade of experience guiding clients through cross-border transactions, particularly in residency and citizenship by investment solutions. His career has spanned both law firm practice and in-house counsel roles with a leading real estate developer, and giving him a unique perspective in the intersection of law, investment, and global mobility. He's joined Passport Legacy in 2021, and more recently, he relocated to Nigeria in 2024, having been helping individuals and families explore tailored pathways to global residency and citizenship. Please welcome with me the manager of Passport Legacy, Andre Conserves. Thank you so much, Andre. And up next is a seasoned legal and financial services professional with over a decade of experience in growing, preserving, and transferring wealth. Her career spans leadership roles at top trustee firms in Nigeria, with deep expertise in estate planning, corporate law, and wealth management. Today, she drives strategy and innovation at Cordros Trustees, helping individuals and institutions secure their legacies. Her philosophy is simple yet powerful, that true wealth goes beyond numbers. It's holistic, community-driven, and anchored in a legacy that lasts across generations. Please welcome Mofoluwasho King, who is the Managing Director of Cordros Trustees. A round of applause. All right, and up next we have a Toronto-based real estate strategist guiding high net worth families in legacy-aligned property acquisition across Canada and the Caribbean. With a focus on cross-border insight and intergenerational planning, she identifies high-growth real estate opportunities that preserve value, offer flexibility, and reflect the evolving priorities of wealth holders. Her unique approach bridges data, long-term vision, and pride of ownership, helping clients see not just where capital should flow, but why. Please join me as I welcome a real estate investment specialist, Mutiat Bello, as she joins us on stage. And our next panelist has over 18 years of expertise in tax advisory, family wealth succession, and wealth management services. He's a partner in the private clients and family wealth practice at Anderson in Nigeria. He has helped countless high net worth individuals and families design investment holding structures that preserve wealth today and ensure smooth transition across generations. Beyond private clients, he has advised multinationals on chartered accountant and chartered tax practitioner. He has advised multinationals on tax structuring, compliance, M&As, and business reorganizations across diverse industries. He's a chartered accountant and chartered tax practitioner and is passionate about knowledge sharing, regularly facilitating training on finance, tax, and wealth structuring for executives and practitioners. Please join me as I welcome Suleiman Yahaya, partner, private clients and wealth at Anderson. A round of applause. And to facilitate this conversation, our moderator is a multi-award winning TV host with New Central Television, lawyer, and compare, Olive MOD. Cheesy much. Thank you very much, ladies and gentlemen. I think I'll start with Mofoluwasho King. And I'll be starting with you because the concept of our conversation today is around wealth creation. But when people hear wealth creation, they think it's only for the wealthy. And it reminds me of when in law school, they asked us to go and ask our parents to write their will. And their parents said, do you want me to die? So people think it's only for wealthy people. Is that a true concept?
Good afternoon, everyone. Actually, no.
Or for rich people? Yeah.
That's another dynamic. But the answer to both questions is no. It's not only for rich people and it's not only for old. I have this philosophy that as long as you have something, plan for it. If you're going to plan for it to grow, also plan for it to be transferred successfully and seamlessly. So whatever tool you need to use to put that in place, I advise that you take full advantage of that and go ahead with that. That's
all right. Thank you very much for highlighting that it's not only for rich people and it's not for the old.
Yes.
I'll come down to Doinsola. And I would like you to explain the difference between investment, wealth management and investment, because people oftentimes confuse the two terms. Are they the same thing? If not, what are the differences?
Good afternoon, everyone. So I would say that investment is like a piece in the puzzle. So it's simply putting your money to work for you in assets like stocks, fixed income securities, money markets, or even real estate. Whilst wealth management, on the other hand, is the bigger picture. It brings together the totality of your investments, emphasis on investments, but with considerations to estate planning, tax planning, risk management, and even your lifestyle goals. So think about it this way. Investment will grow your money, but wealth management would ensure that that growth is protected, transferable, and is purposeful. Thank you very much.
Thank you very much for that answer. I mean, wealth will grow your money, investment ensures that it's transferable and it's possible. Investment will grow your money, and then wealth management will help you that it is transferred.
Yes, please.
Thank you very much. Let's now go to Mutiat Bello and talk about real estate. In Nigeria, for example, one of the most interesting ways a lot of people want to invest in is real estate. However, they don't often consider the risks in investing in real estate. So, especially in an economy like ours, what would you say are some of the risks that that can befall a person, or a risk that one has to take into consideration when investing in real estate?
Thank you for that question, and good afternoon, everybody. It's from
Good
Toronto,
afternoon.
but it's definitely my honor to be here. Thank you for the invite.
Can we give her a Nigerian applause all the way from Toronto?
And so that is a very big question, and there's so many risks and traps that we can say. But I think if I'm going to summarize it, I'll say that real estate is definitely much more than the brick and mortar of what you're buying, right? It's a very sophisticated asset, and so people just look like, I can touch it, I can feel it. But it goes way beyond that. There's the financing context. There is the what vehicle am I buying the real estate inside, so that when people like doing solar take over your portfolio, it's much more than that. So that sophistication can never be underestimated.
Right. Thank you for that. I'll now come to Andre. And I mean, you all are speaking from the different areas of your expertise because, like we said, it's a holistic conversation about wealth. And for Andre, we're talking about second citizenship or getting a second passport, which a number of people seem to like the idea these days, and people are starting to invest in that. But beyond the idea of, oh, I don't have to apply for visas to a number of countries, or the prestige that comes with having a second passport, what would you say are the financial benefits, maybe, that can come to Nigerian business owners who choose to get second citizenship?
So basically, as you said, the first thing, it really depends on who you're talking. For people from Africa, Middle East, Southeast Asia, the major concern is better access worldwide. You don't want to apply for visas every time. You don't want to be stuck in procedures, to be denied, and so on and so forth. What most people forget as well is that this is not a passport. This is citizenship, something that you can pass down to future generations. There was so much talk today about legacy. What do you pass on to your children? What opportunities do you give them? So this is a big one. If you're talking about residency by investment, for instance, what you're discussing is an investment in a property. That as well, with the tools that wealth protection, you can transfer down to your children so that they have an asset, and so on and so forth. In terms of financial benefits, it depends on what investors are looking for. We have a lot of, these days, European and North American clients that are looking into the citizenship as a tool in a bigger plan for tax optimization, for instance. If you get the citizenship or the residency based on an asset, you can put this asset to rent, to yield for you, and you can dispose of it after a while in most programs. So the answer to that is quite diverse. In most cases, the immediate benefit you get is immaterial, but there are some financial benefits to it as well, especially when there's a property or other asset involved that triggers the acquisition of citizenship or residency.
All right. Thank you very much, Andre. I'll come back to you shortly. The freaking billionaires, wealthy people, but they don't think that it is something that the average person can aspire to. So I'll come back so that you can give us a clear picture for those in this hall who are maybe, and those watching online. Just to mention, we're streaming live on our YouTube page, so you can share Cordros' YouTube page on your WhatsApp status, your Instagram status, so that family and friends can be a part of this insightful conversation. Let's come to you, Mr. Yahaya, and talk about tax. And tax has become a very popular conversation in the most recent months. What would you say are maybe some of the most common misconceptions that a number of people have about tax, especially in the most recent times?
As you get second citizenship, as you transfer your wealth and you invest in real estate, tax will follow you. Aspect of wealth preservation, right? In Nigeria, we have a tax reform, right? And in the last 1 year or thereabout, it's been about why he was delivering his keynote. He talked about 3 key aspects. There's growth, there's preservation, and there's transfer. And I dare say at each of those stages, again, tax will follow you, right? Now, as you invest and grow your asset and grow your estate, there's usually this imaginary shareholder that you usually don't take note about, and that's the government. So once you've done everything, he then says, where is my own share of the dividend, right? Now, how you do it is important to optimize the assets so that really and truly you can protect your wealth for the future generations.
Okay, so tax will follow you everywhere. And that tax has followed me and brought me now back to doing solar. And the next question that I wanted to ask would be habits, money habits. And I ask this because some people, there's several reasons why people will complain about not paying tax. Some would be maybe dissatisfaction. Other reasons would be I don't even have enough. But before we get to not having enough, there are certain habits that will guide the way that a person can, if we can determine that this person is being resourceful or if they're going to be able to transfer wealth. So in your experience, what would you say are some of the habits that the wealthy have when it comes to how they use their money? And what lessons can we pick from there? Those of us that are aspiring to be wealthy.
So one money habit that I would say I've experienced over the years with the wealthy is deliberate planning. They are very intentional when it comes to their money. They don't treat money as a short-term asset. They see it as long-term. And even if when we are engaging them, we understand that they know what they want their money to do for them. And that is the basis to which we structure their portfolio. So with planning and building wealth, one thing you will take away is discipline and structuring is what keeps your money intact. Thank you.
I think the flip side of that question would then be for those who are not being very conscious of wealth management, how do you see that they use their money and what are some of the habits that you see? And I'm asking this so that people in the hall, we can start to think of how we see money and how we spend money and know what areas we maybe need to make adjustments.
Okay, so with money, you need to build a governance around it. It's either you bring in a professional early to guide you on how to be financially disciplined, or you even educate the next generation on how to preserve your wealth. But largely, you need to be conscious about savings and investment in order to protect your future and not just have busy money. You're just throwing around money and the money not working for you. So the basis is investing judiciously to ensure that your future is secured and you are on the path to financial freedom. Thank you.
Thank you very much for that. I'll come back to Mutiat. Being on the path to financial freedom, one of the things that, again, real estate is a very key tool for investment. But how do people see, because when we think of real estate, the first thing you think of is buying and selling. You buy property, you buy land, and you wait for another couple of years, you resell it, make the money, and rinse and repeat. But what other ways can individuals and businesses see real estate as a tool for long-term financial freedom?
Yeah, so with your permission, dear moderator, I want to take some time with this question because I think it's at the heart of basically what the keynote speaker was saying and a lot of the major themes that we're really discussing today. And I think the beginning of it was the question when it was posed that what is the speed of change of the factors that affect your wealth? So that's sort of the beginning of that point, because if real estate is a vehicle for wealth, what is the speed of change for those factors that tell you where to put your money? Are there markets where there are currently heavily distressed assets that right now, if it's going at $300,000 lower than what sort of the benchmark price is, if you project that 5 or 6 years into the future, buying it in the right vehicle, is there sort of a trapped equity in there that you can maximize in the medium term? So those are some of the deeper questions that I want us to think about. And also, when we were getting the economic outlook, one of the factors that I saw, and I asked the question on the FDI, maybe I should have put my name there, was that if we're thinking of Nigerians abroad, or maybe Nigerians here who are investing abroad and growing their capital elsewhere, to repatriate some of those funds to be able to invest in the critical infrastructure, for instance, that can prevent social malaise and all of those things, where do we then grow these assets in these foreign economies? Because if IMF and all those people aren't bringing dollars into Nigeria, how can your average rich Nigerian, high net worth Nigerian, invest in an apartment building or a hotel in Punta Cana and give you serious USD that you can then bring back into the Nigerian economy? So we have to think broader than what I was saying before about it's the brick and mortar. We have to think broader again than I bought it today, I sold it 5 years, I grew 20% inflation. No, right? There are ways that you can optimize your capital without disposing the asset. This is where smart financial strategies come into play. And I have my partner here from Toronto, Jeff. We can definitely get into some of that He really focuses on the commercial aspect of real estate because there are ways that you don't have to dispose of the asset and you can refinance significant equity to then plow into whatever your projects are here. So there's definitely deep conversations around that. And again, not to take too much time, but
No, but I want to push back a little. If you
Sure.
can share with us one of the ways in which you can get that without having to dispose of the asset.
okay, so I can use a very, very, very personal situation. She's not a very rich girl, but you know, they're assets. So just very quickly, in 2018, I bought my very first property directly in my name. I think I bought it at about $350,000. By 2021, it had grown from 350 or whatever I said to about 750,000 Canadian dollars. And so whatever X that is definitely over 100%, right? I took out $200,000 from that, and I still had way more than 40% equity even after I'd refinanced. I did not sell the property. I basically leveraged the fact that interest rate was low, and the growth of the asset. I think somebody had mentioned earlier that if your asset is growing at a faster pace than the cost of borrowing, then you are in constantly a net positive equity position. And then you take that bulk of capital to go reinvest either in buying extra properties or you invest in public-private partnerships, for instance. I remember when I was working in Kwara State government, we had a lot of streetlight infrastructure projects. And it was average Nigerians that invested in those projects. And it was over 200 kilometers, and it was just average Nigerians, average business people. They didn't necessarily go to CBN for loans. They just used their own equity and their own assets to purchase these properties. So there are lots of ways that real estate can be part of a broader financial tool and even a broader business financing mechanism that we can definitely get into. Sorry, not to take too much time.
Thank you very much for that. And you know, with all that money, all I could hear is tax, tax, tax.
Well, so the interesting thing is, if you're using financial tools, for instance, in Toronto, because you're borrowing against yourself, you're taking debt against yourself. So your capital gain is actually low.
Right.
So even though your asset is growing, you have cashed out, but overall, you have more debt. So because of that, your tax obligation is not as much.
Interesting. Let me go to Mihaya now and talk about tax. And as we count down to 2026, there's been a lot of information in the news and social media. People are feeling nervous about tax in 2026. For businesses and for individuals who hold cross-border investments or even investments in Nigeria, what proactive steps must they take to ensure that they are tax compliant in preparation for 2026?
Okay, so thanks for that question. So typically, when you look at your typical profile of your HNI, he will be that person that has tax footprint, or not tax, that has investments in more than one jurisdiction, right? So you probably have investment or assets in Nigeria. Our favorite destination as Nigerians will be the UK and the US, and then you see, Dubai and the rest. Now, what's happening globally with taxes is that there is a lot more collaboration that we're seeing. Nigeria has signed on to a lot of multilateral agreements for exchange of information. So you can be in the US or in the UK, for instance, earning income as a Nigerian citizen. But if you are not declaring that income here in Nigeria, there's a way that that information can be exchanged and you can still be found out. That's one. Secondly, also, is you need to be proactive with tax matters, right? As you invest cross-border, you need to be aware of the tax implications of different jurisdictions, right? And again, that also goes into the type of investments that you have and your circumstances, right? So you're talking of wealth preservation and transfer. For instance, if you're a high net worth individual and you have maybe US persons that either hold US passports or have US green cards within your structure, right, it has significant tax implication because it can drag that entire structure into the US tax net, right? So how are you setting up these kind of structures? If you're acquiring real estate in the UK, for instance, inheritance tax is 40%, right? We've seen cases where the heirs, have had to sell those assets to be able to pay the inheritance taxes. If you want to sell, there's capital gains taxes. If you are in Nigeria, for instance, or even if you are acquiring in the UK, you pay stamp duties, right? So really and truly, what you need to do first is to be aware of what the changes are, right? As you transact, as you move around, you need to be aware of what the changes are, and then seek advice on proactive strategies to plan around whatever tax issues that you may encounter. And if you have tax footprints in multiple jurisdictions, you don't need to do it in pockets. You need to look at your global circumstances and then see how each of those jurisdictions tie into each other. Otherwise, you'll be risking double taxation on same stream of income, and of course that just more or less fritters away the wealth of the estate, right? So like I said, tax will follow you everywhere, but it's not that bad. You can still manage it, but you just need to seek professional advice on how to manage it efficiently.
And will the tax still follow people to administration of estates?
Oh, certainly it does.
Which is what leads me to my next question, because I want Ufoluwasho to answer the next question about administration of estate. You've said to us that it's important, and it's not just the wealthy or the old that need to plan their estate. And from your experience, I'm sure you've had very interesting stories, maybe sad, some that could have been avoided. But can you share with us practical examples where failure to plan one's estate has caused some sort of family conflict?
Oh, thank you very much. I'm very sure that if we ask by show of hands, people to tell us of estates that have caused conflicts within the family and beyond. I know popular ones that we are aware about. That's very common practice. And it's cultural nuances, especially in this region, right? People are worried. And it's also often a morbid discussion. When you tell people, oh, plan, like you said, law school, when we're in law school, say, oh, why don't tell your parents to write their will? Say, so that kind of idea. So, but it's important. Everyone here has mentioned, you have to plan. You literally do not have a choice. You can leave it to faith and all, but you won't be here to witness it. But why not plan strategically, right? I just want to set an example. He had mentioned 40% inheritance tax in the UK. There are taxes here to estates, depending on the jurisdiction or the state. It varies from state to state. Some places in the east that has 20%. In Lagos, it's 10%. All those you will pay it. It's on average, like he's following us everywhere. He's not budging. So you really have to make a conscious effort. There are tools available to plan, for people to plan. So personal experience, I'll use my dad as an example. My dad was one of those people that said, I'm not writing yet. Wait, I still have, well, he passed. And I know the stress we went through to get letters of administration. It could have been easier, it could have been seamless, but it was not. And after that, I remember my mom also saying, please come, where are we writing this thing? I'm not allowing you to go through that process anymore. So that's one of the personal experience. I'm sure everyone has experiences of people they know, or people that they know that have experience where families have fought, come to the social media, come everywhere to make cloud their contentment about how someone who had not planned, or someone who had even planned but they feel the plan is not to their favor, so they're not going to.
And then people will start contesting will. We've seen that happen
and
many times.
Contest wills and all. So, like Keynote speaker has said, there are ways to avoid that. There are other tools. The most popular, yes, is a will, because we're encouraging people to plan. But there are many other tools.
So can you give us a practical step for someone who's here and says, I want to start to plan my estate?
Yes.
What are the practical steps they can take from today?
Okay, the first thing I always tell people is that, what do you want to achieve? I always say, do you want to leave a legacy, or you want to just cater for the next generation, right? Like my children, my immediate children. Or do you want to see that my great-grandchildren's school fees should be paid from my estate? Those are the questions you have to ask yourself. And once you find the answer, you have to decide that. Once you then you have to take practical steps. One that is building in society, luckily, based on education, is that people are using trusts as a vehicle to cater for future generations, not just one. Again, the data shows that only 3% of the wealth gets to the second generation. But if you plan it properly and you put structures in place, more popular right now is a trust. And you see that in the next 4 generations, people will still be inheriting from this. Then it puts in a better position. knowing your wealth, knowing what you seek to achieve, and how you can take steps to help you achieve those aims.
Thank you very much for mentioning that. Seeing as you've mentioned structuring wealth, let's come to doing solar now and speak about at what point does a family say, you know, we're ripe for a structured wealth plan? When do they know that they're ripe for it?
Okay. Trying to pick my word to punch in the numbers. But the truth is, if you have multiple investments and you don't have a clear view as to what your total net worth is, you need help. If your income has grown and your lifestyle spending is outpacing your savings and investments, you need help. If you have multiple assets and you don't have any clarity or any plan for transitioning, should anything happen to you right now, you need help. What you need is to speak to a wealth management advisor. You can come to us at Cordros, and we typically run through the journey with you. We would understand what your current situation is in terms of where you belong in the financial life cycle, and we're able to come up with a simulation as to how to manage your portfolio. All of this with your buying, because we need to have like a one-on-one session with you to understand your needs, your objectives, and what you want your money to do for you. And we would help you achieve that. Thank you.
Thank you very much. I think that's really great advice. Everyone here, and I'm hoping that it's getting us to think about our investments and how, if you do not have a plan to hand that over, you definitely need to get wealth management. I'm going to come to Andre now and ask you the big question. For people who are thinking and looking at investing in, you know, second residency, second passport, second citizenship, what are the numbers like? Give us a range from like an entry point.
Thank you for the question. There's something for every purse, and there's a shoe for every foot, basically. So the program started around 90,000 US dollar, and it goes up from there. 90,000 US dollar affords you a passport in São Tomé that just launched the Citizenship by Investment program. That might not sound very interesting because it's an African passport. At the end of the day, it does not afford you the most mobility, but there's all the way up to something like around 800,000 US dollars for the EB5 while it lasts. There's something for every budget, I would say. Even like Mr. Aino was showing us a graph earlier, breaking down the type of millionaires from millionaire next door to ultra high net worth individuals. We have clients in all the three groups, applicants in all the three groups. And basically it doesn't mean that the ultra high net worth individual will fall necessarily under the most expensive option. Most of the clients that fall under that criteria or under that purview are in fact US citizens and would want to give up their American passport as not to pay taxes in America even if they don't live there. Do not have FATCA and the taxes following them wherever they go. And yeah, I believe that answers the question.
All right, thank you. I wanted you to also touch on, if you can say how this ties into hedging educational costs, because we see a number of parents in Nigeria, for example, who want their kids to school abroad, maybe for secondary school or for their university level. How would you say that getting this ties into hedging educational costs?
So the programs that we offer in terms of citizenship in the Caribbean, they are Commonwealth programs, so there's more advantages. Tuition fees, for instance, in the UK for Commonwealth citizens. We offer a program in Canada as well, the Startup Visa program, by means of which it's a straight path to permanent residency in Canada. And the amount of money that you save in tuition fees by doing this program, if you have especially 3 or 4 kids, as it is the case here most times, it's very significant. So there's quite a few things to be explored there. It also depends on the path that the children decide to follow or the idea that they have, if they have a saying in the matter, of course.
All right,
Yeah.
Thank you very much for that. We'll take questions and answers shortly, so if you have questions, we can only take a few. But before then, I think my final question will be to Yahaya and to ask you, FIRS 2026, we're seeing here that the Nigerian Revenue Service is replacing FIRS, and my question would be, what should individuals and organizations expect in terms of the changes to how tax will be collected in the new year or will be paid in the new year? I think you've touched on this earlier in some measure.
Yeah, so thank you. So just to clarify, so we have maybe, because of our federal structure, so the taxes of the companies are collected by, or going forward will be collected by the NRS. And of course, for the individuals, it will be the tax authorities of the states where you are resident, right? So what we're seeing, for most people here, clearly that earn above 50 million and above, you might see a slight increase in your effective tax rate, right? For those that engaged in maybe cross-border transactions that have structures outside of the country and all of that, you need to pay attention to capital gains taxes, because we now have expanded rules to capture in, more transaction into the Nigerian tax net. But I think one thing you need to have at the back of your mind is, as a Nigerian citizen, you're actually liable to taxes on your global income, right? So even if you're in Nigeria and you earn income abroad, except if the law exempts it, then it will...
Sorry, can you please clarify that again?
Yeah, okay. So let's say you have, you are a tax resident in Nigeria, and then you have other investments outside of the country, where you are earning income from. The law requires you to declare those income in Nigeria and pay taxes in Nigeria. But of course, there are a few exemptions here and there, right? If it's from a country where we have a double tax treaty, then you get exemption, for taxes paid, or the taxing rights goes to that country. For certain category of income, if you repatriate them into Nigeria, you may get tax exemption, but if you don't, then you should declare and pay the taxes here in Nigeria. Well, like I keep saying, with taxes, first thing you need to do is to understand what your obligations are, right? Secondly, you need to comply and understand how to comply. And I think, that information is out there. Now, you want to ask, what is the consequences of not doing that? You will still end up paying what you should have paid, originally, in addition to penalties, interest, depending on who you are. You may suffer reputational damages. These days, with the revenue drive, we're seeing more cases in court, of HNIs being sued for tax evasion, and all of that. But if you do it rightly, honestly speaking, you'll be efficient and you would have discharged your civic responsibility as a citizen as well.
Thank you very much, Suleiman Yahaya, for that. We'll take a few questions in the audience. If you have questions, please, by show of hands. Let's see. If not, we'll move ahead. Any question? Going for the first time? Going for the second time? All right, we have a question over there. Please take the mic. Your name, please, and your question in 30 seconds.
Good afternoon. Thank you very much. I'm enjoying every bit of this event. But my question is in this direction. I'm trying to... Please, in 10 seconds, what's the best way to... I don't want to use the word evade, but at least escape taxes. Like, I'm thinking I have an idea, just answer it. Thank you very much.
Wait. I don't even know if I should rehash the question, but I'm sure you understand what he's trying to say.
Concern, right? Especially if you're a Nigerian, right? There's this general view, of course, when you talk to people, you say, oh, with all these taxes we're paying, our roads are still bad, we're still government unto ourselves, and perhaps that's where you are coming from, right? But one thing we need to have at the back of our mind is, taxes or taxation generally is a creation of law, it's a creation of the statute, right? And in those laws, you have responsibilities that you are mandatorily required to discharge, by law. Now, failure to do so has consequences, so that's the real hard truth about taxes. The second part to look at it also to say that more in holding government to account in terms of, how those monies are spent, but that's a separate topic. But the third question also, which is where your main point is, I don't think the question should be about escaping taxes. It's about how you efficiently manage your taxes within the law, such that you are not in breach of any provisions of the law. Of course, even within the tax laws, there are tax breaks, there are tax incentives that are provided, that you can take advantage of. But you need to look at your peculiar circumstances, look at your income streams, look at your either business background, and then see within the confines of the law, right, how can I then optimize my taxes? I don't think the question is about escaping per se. I don't know if I've been able to answer your question.
Okay, I'm sure that when we're done here, our panelists will be glad to have one-on-one conversations with you, because networking is also a key part of what we're doing here today. But I think we can squeeze in. Do we have one more question to squeeze in before we move on? All right, that will be all. Can we please give our panelists a round of applause? Thank you so much. But as we're wrapping up, I'm going to give each of you 30 seconds each to maybe share your closing thoughts regarding wealth creation. And after that, we'll rise for a group picture. I'll start with you, Mr. Yahaya.
Oh, okay. So just to thank Cordros for this opportunity, and then to say that the topic that is being discussed today is a very important topic that I think we need to think about. And in thinking about it also, is to approach professionals like Cordros, to help you out. You need to plan. I think it was Oluwasha that talks about planning. You need to plan, and you need to plan with experts. We do know that there are a number of service providers out there, but you need to find the very experienced and trusted partners like Cordros to work with. So I will say the conversation should go on, and of course, put taxes at the back of whatever you're doing, just to protect your estate. Yeah.
Thank you for that. Thank you very much. Mutiat?
So because we've just finished talking about tax, I think it's a perfect opportunity to segue and let people know a couple of things. First thing is that in Punta Cana, which is in Dominican Republic, for the next 15 years, there is zero capital gains tax. Zero for specific real estate investments. So basically, make all the money you want. Even if Nigeria taxes you, you still have money. In St. Martin, as we all know, very, very, very tax-efficient climb. And the final thing I would say is, as Nigerians, yes, we love the UK, we love Dubai, but please, I want to beg you, let's think about how much my Naira can go. If we're talking about exchange rates, we all know pound, USD, Canadian dollar. Obviously, it will go further in certain currencies. And the other thing is that you may want to send your child to school in the UK, but that doesn't mean that the funds for that can't be grown in another country, right? So we want to think about allocation as part of diversification and not just say, because they're going to Kent, I must buy a house in Kent. No,
Right.
You can buy an apartment building in Waterloo, Ontario, and that will also help you achieve the same aim. Thank you so much.
Thank you very much for that, Mutiat Bello.
Okay, I want to say estate planning is a very tax-efficient tool. Do not underestimate it. As much as the tax people are coming, the transfer of your wealth done efficiently can be very tax-efficient, and you should take advantage of that tool. Thank you.
Thank you very much, Mofolu Shocking. Andre?
So to thank everyone for sitting to the end. To say a word that this is, as it was said today, is about family, is about legacy, is about protecting what we have to make sure that it goes to the future generation. And more than that, I know that you're all very deft and adept businessmen, but please, please listen to the professionals. We are here to help you to help you make money, to help you keep your money, to make sure that you don't pay more tax than what you have to, and you do the right, to help you make the right choices. And that's it, yes.
Thank you, Andre. Thank you for that. And finally.
All right, thank you, Oli, for allowing me to close the panel session. But I'll start by saying, if you don't build wealth, there is nothing to plan. If you don't build wealth, there is no second citizenship. If you don't build wealth, you won't be concerned about tax planning. And if you don't build wealth, you won't expand your real estate portfolio. So it begins with wealth management. So please see us after the session. Thank you very much.
Thank you very much. What a fantastic way to wrap up the panel session. I really like that. You said if you don't build wealth, we can't do any of these other things. At the end of the day, you cannot give what you do not have. Thank you very much, ladies and gentlemen. May I please ask that we rise for a group picture? After this group picture with the panelists, then I'll welcome the executive leadership at Cordros as well as all our speakers to join us for a group picture. But can we rise for one first? Thank you. Thank you very much. Can I also please ask that our executive management here at Cordros, our directors here present, please join us, our speakers, please join us as well for a group picture. Can we please also ask for Chris and Bolawon to join us? Our MDs and directors here present. If they're outside, can they please come in and join us? Thank you. Photographers, please hold. We have 2 more people joining us. Fatima, please, can you join us as well? Thank you very much. Once again, can we give them a round of applause as they make their way to their seat? And we're fast coming to the end of today's event in the next few minutes, but we cannot end without, first of all, bringing to you our wealth report. But first, let's take a look at this video.
Isn't just about how much you have. It's about the options and opportunities it creates for you and your family. At Cordros Wealth, our role is simple: to help you grow, protect, and enjoy your wealth whilst making sure it lasts for generations to come. So how do we bring this to life? It begins with how your money works for you. Through tailored investment management, we design portfolios that reflect your goal and risk appetite, whether that means equities, fixed income, real estate, or even exclusive opportunities like private equity and venture capital. With us, you don't just invest, you invest wisely. But building wealth is only one part of the story. Preserving it for those you love is just as important. That's why we provide financial and legacy planning, guiding you through estate and succession strategies that make wealth transfer seamless. And if you want your money to reflect your value, we help with philanthropic giving and impact investments that create lasting influence. Of course, wealth should also make life more enjoyable. That's where our lifestyle and concierge services come in. From luxury travel planning to securing VIP access at exclusive events, we take care of the details so you can focus on living the life you have worked so hard to build. Sometimes opportunities don't wait. With our exclusive financial and credit solutions, you always have the flexibility to move quickly. Thanks to customized lending, liquidity management, and premium banking products designed for your convenience. And because we know protection matters as much as growth, our risk and insurance solutions safeguard your wealth and business assets. From tailored insurance to continuity planning, you can pursue opportunities with confidence, knowing what matters most is secured. Even the smartest strategy can be weakened by poor tax planning. That's why we provide tax optimization services that help you keep more of what you earn while staying fully compliant, professional, and committed to making your wealth work harder for you. At Cordros Wealth, we don't just manage your money, we help you build a legacy, elevate your lifestyle, and unlock opportunities that go far beyond finance. Cordros Wealth, with us, your wealth is in capable hands.
Thank you. I like that applause for Cordros Wealth, because with us, your finance, your money, your wealth is in capable hands. So we look forward to doing business with you. It's time for us to unveil the wealth report. This will be the second wealth report that we're unveiling here. And I'm going to welcome the Managing Director of Cordros Securities Limited. He has over a decade of experience in finance and investment. He brings a rich background as an economist, a chartered accountant, and stockbroker. Before taking the helm at Cordros, he built his career as a senior sell-side equity research analyst, where he covered some of Nigeria's largest consumer goods companies, cement giants, and leading banks. Over the years, he has advised and managed a diverse pool of institutional investors, with about half being global brokers and fund managers. Please join me as I welcome the MD, Managing Director of Cordros Securities Limited, Christian Orajekwe, as he comes forward. Thank you very much, Christian. And joining him, I introduced him earlier, so please can we reintroduce with a round of applause the MD, Cordros Asset Management Limited, Adebola Aina. A round of applause for them. Did you rent a crowd?
Thank you, Olive. Thank you, everybody, for staying so far. Everybody has stayed glued to their seats, and we're about rounding up. So I just want to do something very special, something very dear to our heart now. I want to launch the second edition of the Cordros Wealth Report. And we've sort of created it for our very special clients. But let Christian just speak a few words.
Thank you. Right. So the Cordros Wealth Report, this is the third edition. We had the first one, I think, about 2 years ago. We had the second one last year, and then this. This is a very detailed report, which I encourage everyone to read. I think we spent about almost a year putting together our thoughts in developing these documents. When you look through it, it contains about 10 topics, that covers the length and breadth of what, we have discussed today and what the message we are trying to pass to clients. I'll just quickly read out some of the very important line items, in these documents. I think the first topic speaks about reform to recovery. There's also an aspect that speaks to passion investments, essentially talking about people investing, investing in asset classes that they're passionate about. There is a segment that speaks to asset allocation in Nigeria's post-reform economy. There is an aspect on Cordros Wealth Management Services. Nigeria, in a period of calm and economic shifts, estate planning, as a legacy, was widely covered here as well. There's also a segment on impact investing. There's also a talk on how global markets global capital can unlock Africa's energy future. It also touches on crypto. As you remember, Trump was a crypto critic, and who eventually became a crypto supporter. And as the NGA and as the SEC has said today, Nigeria is essentially the capital markets in Nigeria today is focusing a lot on digital assets. So that's a new horizon. I thought it was necessary that we cover this in our reports. And then finally, there's a segment on citizenship. There is significantly growing investment in citizenship now. So this report was written by different contributors. Some are clients, staff of Cordros, and then we have external parties that are, experts in the various topic areas. So typically, the way I like to read is to have, important materials like this, either in my car, in the office, or at home. That way, you often just see it, and it helps you to, just glance through. You can just dedicate perhaps a day or half a day to going through one important item. There's so much we believe you can benefit from reading this report. So I think at this stage, we move to, there's going to be a countdown as we try to unveil the report. We're going to count from 10 downwards. So, audience is going to join us? Okay.
Thank you once again for presenting to us the 2025 Wealth Report, the Cordros Wealth Report. And I'm sure that at this point, almost everyone in this hall should have a copy. If not, don't worry, a copy will get to you. I'd like to welcome our special guests, our speakers, to please come on stage with copies of the Cordros Wealth Report. We'd like to take a group picture with all our speakers, with the let them take and after that, you guys will join them. So right after them, I'll welcome the panelists. Panelists, please get ready. Doing, please be on standby. We want to take a group picture of the panelists as well. MDs present, directors of Cordros present. Please, we want to take a group picture with the Wealth Report. Get ready, you'll come up next. All right, if we can have MDs here present, please join. The Cordros team, the MDs here present, directors here present, please join for a picture with the Wealth Reports. Photographers, please hold on. We have 2 people yet to join. Ms. King and Doyin Sola, please join us. Doyin Sola, come. No, don't worry, it's fine. Give me one. All right, thank you very much. Doyin Sola is joining us now for a picture. And now can we have the panelists join as well for this group picture? Please hold a copy of the Wealth Report. Can we get more copies? Ushers, can we please get more copies brought to the front? Ushers? Jeff, can you please join all the way? Can we please give Jeff a round of applause as well? Jeff is joining us all the way from Toronto. Can we mix up a little bit? Yes, thank you. Aha. You should have even stayed beside him to break the colors. I think you should have stayed beside the MD to break the colors. Yeah, you should have stayed beside. Okay. All right. And for the rest of us in the audience, we want to encourage you, please take pictures of the Wealth Report. All the pictures you've taken today, tag us. We're Cordros on all social media platforms. We'd like to repost your content. We want to see the insightful moments that you've gotten from here. And now to give us the vote of thanks, I would like to welcome the head of Northern Region at Cordros Capital Limited. She plays a strategic leadership role expanding Cordros' presence and client relationships across Nigeria's northern states. Her leadership reflects Cordros' commitment to serve a diverse clientele, private, corporate, and governmental across the country, ensuring that wealth creation opportunities are accessible and relevant beyond the traditional financial hubs. Distinguished ladies and gentlemen, may I ask for one final, okay, second to the last, but almost one final applause, and can we make it loud, for the head Northern Region Cordros Capital, Fatima Okpalaji. A round of applause for her. So that next time they will invite us to Abuja. Can we make the applause a little louder?
Okay. Good afternoon, everyone. As Olive said, my name is Fatima Okpalaji. Distinguished guests, esteemed speakers, respected dignitaries, and valued attendees, It is with immense gratitude and a heart full of appreciation that I rise to express our deepest thanks to everyone for making this Wealth Summit a truly remarkable event. First and foremost, we extend our profound gratitude to Almighty God for granting us the wisdom, strength, and opportunity to gather here today. Seeking knowledge, sharing insight, fostering connections, and we believe it will sow seeds for a prosperous future. To our lineup of speakers and panelists, we are deeply grateful for your generosity in sharing your expertise, experience, vision with us. Your contributions not only enriched our understanding of wealth creation and management, sustainability, but also inspired us to think differently, act boldly, and strive for excellence in our pursuit. Your impact will undoubtedly resonate beyond this event, influencing decisions and shaping strategies in the days to come. To our heartfelt appreciation goes to the partners whose steadfast support and collaborations were instrumental in bringing this summit to life. Your belief in this initiative and commitment to drive economic growth, wealth creation in our region are truly commendable. We are grateful for your trust, and we look forward for the continued partnership. To all the beautiful attendees, your active participation, engaging questions, vibrant interactions have been the heartbeat of this summit. Your presence has made the event not only a gathering, but a dynamic forum for exchange and growth. We thank you for being part of this journey with us and hope that the connections forged and ideas shared will open doors to new opportunities and fruitful collaborations. We wish to acknowledge the tireless efforts of the organizing team, whose dedication, hard work, and meticulous planning have been pivotal to the success of this event. Your behind-the-scenes contribution are greatly and deeply appreciated. As we conclude this World Summit today, we are filled with the hope for growth potentials, innovations, and prosperity across our region. Let's look forward to not only the insights we have gained, but also the connections we have made. I believe that this knowledge, relationships nurtured, and commitments made here today will contribute meaningfully to shaping a brighter economic future for all individuals, businesses, communities in Nigeria and beyond. Thank you once again, everyone, for being part of this enriching experience. We look forward to staying connected. We pray that God blesses our endeavors with success. God bless Cordros, God bless Nigeria, and God bless all of you. Thank you.
Thank you very much, Fatima Okpalaji, and thank you very much to everyone who's joined us here, as well as our virtual guests. There are people who are streaming live on YouTube via the Cordros page. Please subscribe to our channel. We have insightful content on the Cordros YouTube channel that will help you in the future of wealth creation. We hope that the insights that we all take here from today will not just be insights that would remain in our notes on our phone, but they'll be practical tools that would guide our decision-making going forward. It's been an honor to serve as your Master of Ceremonies. My name is Olive MOD, and I wish you all a safe journey home. Thank you very much for the honor. We do have lunch. Oh, thank you for the applause. Don't be shy. We have lunch. Our ushers are on ground. They'll direct you to where lunch is happening. But also, you can take the exit to my left for lunch. And also, please ensure that you use that period to network, because you cannot reimagine the future of wealth without networking. Thank you very much, everyone, and see you at Cordros Wealth Summit 2026.